Alright, we're back. We're back. Stream Netflix earnings later, but I want to watch this again since we got it uploaded. See if anyone hops in here before we start it. It's unfortunate the Bloomberg uploaded their video like right as I was about to upload mine. It's kind of funny. What's up, Moose? Yeah, back for Netflix earnings. I know it doesn't start for a while, but I want to watch this one more time as well. Without any interruptions. Well, I'm sure YouTube will play 100 ads. Since that's what YouTube likes to do, is play a bunch of ads, but yeah. Did you get a notification this time? Kind of surprising. Actually sent a notification. I got one for the video. Oh, that's weird. That's very weird. Sends notifications for the videos, but not the stream. Pretty odd. That's super weird. Oh well. Not surprising. YouTube's always trying to fuck me. It seems like. Throw this up here. Only 2 people, huh? Yeah, it must really not have sent notifications. That sucks that it's not sending notifications for the stream anymore. Very disappointing. Not surprised, though. I'm just being straight up. Not really surprised. Go from having over 200 people in here to 2. I mean, I did just start the stream 3 minutes ago, but it's just weird. Like I was talking about yesterday, streaming's just weird. Like, actually keeping viewers is difficult, it seems. People just come into the stream for what they want, and then that's it. Well, I guess let's start it. I'll probably actually like react to this. I don't know why, but might as well kill some time before Netflix earnings since I started this so early. Maybe because the title's still the same. I got rid of the GameStop CEO part, so it's not really the same. But I don't know. I'm not sure. I just think they don't. I mean, I've also, uploaded like a ton of videos the past 24 hours, so that could be a reason. But I just think YouTube hates me. YouTube just hates me. So it seems. So it seems. Alright.
Ryan Cohen joins us on Bloomberg Television and Radio. Ryan, thank you for your time and good morning. Welcome to Bloomberg Tech. On the long list of things that have happened since May, our audience just has a very simple question for you, which is what's changed? What's developed in that period of time?
There has been a complete failure by the media to explain why this transaction makes sense. And so, number one, my track record. Chewy and GameStop, it speaks for themselves. My alignment with shareholders, I'm putting $500 million of my own money into this transaction.
He just comes out swinging, bro. He just straight up comes out swinging. This was a good interview. I liked the aggressiveness. My track record speaks for itself, he says.
High margin growth opportunities for this business within live commerce, which the company has not been doing well, and using GameStop stores as nodes for both the marketplace and live commerce is huge because the business today in live commerce is tiny. And building out a digital marketplace for in-game items, those are just like some of the high growth opportunities within the business. And then there is the cost takeout opportunity. I've committed to taking out $2 billion within the first year, and that's just the beginning. So this whole narrative that the business is going to be too leveraged is a fantasy invented by the media, and it's just
yeah, it really is, because the $2 billion cost cuts first year are gonna pay for the interest on the loan, and that's just what he says he's gonna do first year. Who knows what else he could do, and also who knows what else he could do that he's not telling the market. He could cut 3 or 4 billion first year potentially. Who knows?
simply not true.
Why are you still using bots for your
Oh my
meetings?
gosh, an
How
ad?
else-
An ad? What a surprise. An ad. Oh, we're only a minute 30 in and we got an ad. What a surprise. Freaking YouTube, bro.
On the banking side, let's go there. You lined up some banking support, right? And I think that one of the concerns that Moody's put out there as an example was the credit rating and the credit worthiness of the combined entity. So again, another question from the audience is, explain the banking support that you've secured since May, but also that concern that the debt component of it, what the credit negative outlook would be for a combined entity based on the plan that you've just outlined.
We have a highly confident letter from our bankers. We have a lot of parties that are interested in this transaction. And the most important thing, ultimately, if we can't get the debt, then it means that eBay can't get the debt, and eBay can get the debt. So this entire narrative is simply not true.
I didn't explain that question very well, Ryan, if I'm self-reflective, honest about it. So I'm just going to go back to it. Your financing letter is from TD, right? And it was widely reported to depend on the combined company maintaining investment grade credit rating. And then Moody's came out and said that this deal would be credit negative for the combined company. Have you taken steps to address that?
Nobody has reached out to us, including the credit agencies, but the pro forma company is going to be investment grade.
We talked at the beginning of the conversation.
It's crazy the way the media spins this. They're always trying to spin it in a negative way, and Ryan's like, nah, it's gonna be investment grade, bud. What you talking about, bud? Been reading too much tinfoil, bud. Some Moody's, maybe like credit, maybe analyst credit agencies. Maybe that's the real tinfoil.
Conversation about shareholders increasing the company's authorized share count. Does that allow you to do something new that you couldn't have otherwise done in the context of the eBay deal?
Yeah, I mean, yes, it does.
And what would that be?
buy the business, buy eBay.
I posted on X that you were coming on the show, and you know, in the context of what you've done with financial mechanics of late, you know, the question that existing GameStop shareholders sent to me over and over again is, you know, you're asking them to accept pretty significant dilution, and they're basically asking, like, what's the payoff for them?
It's crazy how he's like trying to say GameStop investors are worried. It's like no real GameStop investor is worried about dilution. Anytime GameStop is quote unquote diluted, it's been beneficial to shareholders. So no real GameStop investor is worried about that. It's just not even a thing. But they want to spin it that way for some reason.
Accepting that dilution.
There's different forms of dilution. Most dilution is dilutive to shareholders. When you're buying a business and I've committed to pulling $2 billion of costs out. So if you do the math, I'm buying a business for $56 billion, and the business is forecasted to make over $3.5 billion. That's the consensus for 2026, plus what I would be pulling out in cost. So you're at over $5.5 billion of EBITDA. And then the ability to take this platform and build a much, much larger business, the upside is huge. So I wouldn't go and buy a business if I didn't think I can take it from 56 billion and turn it into multiples larger. So it's accretive to shareholders, but most of the time when companies are issuing shares, it's dilutive and earnings per share goes down. In this case, it's a different story. But most of the time, you have management teams. A good example is this company that collect tons of risk-free compensation and they're not aligned with shareholders. In this case, that's not the case.
You had the letter from TD. You said earlier you were going to put $500 million of your own money into this transaction. Outside of that, is there any other financing support, any other parties that since mid-May you've pulled into it?
We've had a lot of parties come to us, and there's been a lot of interest from the capital markets.
Dude, this is crazy, man. He's gonna get this eBay deal done, so I wonder how much he's already... Like, is he putting $500 million in eBay shares on the public market? Like, still have yet to see how he's actually going to put that capital into this deal. I would assume it's from the public market, but I guess we'll see. Still have no real information on how that's gonna look. See, I wish I could do a Ryan Cohen interview, because I would ask him that. I'd be like, so you committed $500 million to this deal. Are you going to put the money combined with the offer whenever it goes through, or are you buying eBay shares on the public market? Like, I think that would be a very good question to ask. He probably wouldn't answer it, but I don't know. There's got to be a way to get a Ryan Cohen interview, man. There's got to be a way to get a Ryan Cohen interview. Guy's got deep pockets, just casually drops 500 mil. I mean, he sold Chewy for multiple billions, so he's probably just sitting on a few $1 billion, you know, just sitting there. He'll be like, we'll see. We'll see. I'm not going to call my shots, but we'll see.
We're live on Bloomberg Television and Bloomberg Radio with Ryan Cohen, the CEO of GameStop. We're talking about Ryan and GameStop's bid to buy eBay. Really simple question. Has anyone from eBay, the management team or the board, reached back out to you or responded to you in this interim period?
No, I hope they do, but they're entrenched and they're hiding behind their advisors.
If I go to teddy.com on any browser, I'm diverted back to game.
I think that's such a weird question. The Teddy like, you can, anyone can buy a domain name and link it to GameStop. Obviously, there's a lot of tinfoil that Ryan owns that domain, and that's him. But I don't know. What's up, Angie? Hope you're doing good. This was his best interview so far. I like this interview. I don't know if it's the best one so far, but it is really good. I agree. It's probably his best, like, mainstream news interview, I would say.
GameStop.com. Why?
I'm focused on GameStop.
The root of the question is, let's say that you proceed with this. There's a very wide range of opinion, speculation basically. Why does Ryan Cohen want to buy eBay? At one extreme is the idea that you just want to be the CEO of eBay rather than GameStop. At the other end is the idea that you have a bigger plan, a master plan. You kind of talked about it a little bit earlier. But what's the reality here? What is the bigger picture for a combined entity? Or referencing Teddy.com, there's some history there, but a sort of conglomerate, a holding company.
Oh yeah, an ad, baby. Let's go. Let's go. An ad. Super exciting. All right, let's keep it going.
eBay is a platform that I can build into something much more profitable and much larger. The ability to take GameStop stores and our experience in gaming and refurbished tech and collectibles combined with eBay and be a leader in live commerce, build out an in-game digital marketplace, use the stores for same-day authentication, and
I think it's crazy he doesn't talk about like the rest of eBay's business. Like eBay Motors is massive. You know, like luxury clothing and stuff is super massive on there. Jewelry. Like there's so much more to eBay than just like collectibles, and I don't know. Maybe it's just not in his best interest to talk about it, but yeah, I don't know.
ultimately pull out significant cost, and none of these things come at the expense of growth. It's actually the opposite. The more efficient you get, the easier it is to grow. It makes too much sense. So that's why I want a business. That's why I want to buy it. It's not that complicated. There's such overlap between the businesses, and my experience is in e-commerce.
Right. Are you prepared to improve the offer, Ryan?
I'm
not going to negotiate against myself.
See, that answer has me kind of like, because maybe he is gonna bring them a better offer. I don't think he should. I think he should try to negotiate an offer where eBay rolls over the whole business and combines with GameStop, so GameStop doesn't have to spend a dime. You know, give the management team their little golden parachute, give them their few $1 million so they can get out of there. But I think it's in our best interest as shareholders that we don't pay anything for eBay and we just combine the businesses. You know, whether that's going to happen or not, probably not, but we'll see.
But that might be what it takes.
We'll see what happens, Ed.
You've talked about this a little bit recently. A lot of people point out to me you've done a number of interviews in quick succession, right? What happens if eBay just keeps saying no?
Ultimately, it's going to be the owners of the business that are going to decide who is more competent, who's more aligned with shareholders, and who is more capable of building a much, much larger business. So the management team can only hide for so long. And I would love for this to be a collaborative process and a consensual process. That's my preference. That's number one. But
Right.
if that doesn't happen, then it's going to be shareholders' decision because they're the owners of the business.
Right. I do want to talk a lot more about the GameStop business, a lot more.
The Pikachu business, just a fraction of eBay activity. Not sure what he's talking about when he says overlap. There are many niche products on eBay that don't have much in common. Well, obviously, first you're going to integrate the things they have in common. You know, you're going to integrate gaming, you're going to integrate collectibles, and then over time you'll probably start integrating the other stuff. But, you know, maybe, I don't know, man. I don't know. I just, maybe he just, that's all people want to talk about is the collectibles and gaming part of the business. And also, I think if they asked him about, like, is he going to start integrating those other categories into GameStop, he probably wouldn't answer it. But eventually it's got to happen, right? Eventually you got to be able to bring in like some car part or some clothing or something and be able to sell it through GameStop. You know, whether it be through live commerce or you sell it on eBay and then GameStop ships it. Like, I don't know, you know, I don't know how it's going to look. There was that one interview where he said he wasn't interested in taking inventory, so I guess, you know, realistically, it probably doesn't matter much because he doesn't want inventory. All he needs to say is, I want to buy it, I'm doing it, and we'll see what happens. I mean, that's basically what he said. Rachel Maddow look with those I know it all glasses. What are the chances Ryan already reached out to Rockstar to brainstorm facilitating in-game marketplace for digital items when GTA launches? I mean, it's not just Rockstar. You know, more realistically, Fortnite, Roblox, maybe even like RuneScape. I think there's other businesses than just Rockstar, and GameStop has a lot of partnerships with a lot of the businesses already. But it's too bad Hugh G's not here. I don't know what happened to Hugh G. All the OGs left my stream for some reason, except Moose. Shout out to Moose. Been here since day one, basically, and never left. God bless Moose. All the other OGs left. But I remember him mentioning something that Ryan wouldn't be talking about something if it already wasn't in the works. So it's likely that the digital marketplace has already been talked about and it's possible. I don't think he would be talking about it if he didn't think it was something that could happen. Definitely feel the eBay deal is basically in the bag, and I bet they already have the digital gaming marketplace built and ready. I don't think they already have it built, but I'm sure they've discussed it. They know it's possible. I don't think they have it built already. And the eBay deal it's going to come down to shareholders. That's very obvious at this point. Stephen Cohen, owner of PSA, probably wants part of this deal. Well, he better buy shares then. I don't think Ryan's going to take outside money. I don't think Ryan would take outside money. He'll probably get that loan from TD Bank and that's it. Anyone else, they'll just have to buy eBay shares and vote him in, or buy GameStop shares and hope he gets voted in. I don't think they rush anything. I think the longer it takes, the more value it's going to bring to GameStop shareholders. You know? How do you hype this stream? Some videos have hype points available. How does that work? I don't know. I've turned the hype thing on. I don't know if streams have hype or not. It might just be videos. 18 months, Moose. That's crazy, bro. 18 months. That's insane, bro. That's actually insane. I love eBay, but stopped using it because of all the con artists selling fake or used shit as new with no returns. So if can fix that, I'd be back as a regular. I hate Amazon. I mean, eBay will basically always side with the buyer for the most part. So, but yeah, there is a lot of fraud on eBay for sure. Even if they have no returns, eBay usually sides with the buyer in a lot of cases. But I haven't bought something on eBay in a very long time. Yeah, I think they have the blueprint and all the components have been tested individually. When time comes, they can weld everything together and build the missing connections. Yeah. Break Nation. And Yesterday Gaming, Oberweiss, Angie, Lola, Moose. Appreciate you guys stopping in. Echo. Is this the GameStop interview? We're getting a local Orlando mayor candidate skippable ad popping up every 3 minutes. Ah, that sucks. Dude, YouTube's ads are like so intrusive for some reason. The past like 2 or 3 weeks, they did some update on the ads. And dude, you get so many ads on YouTube now. It's ridiculous. You gotta download an ad blocker or something. That sucks, man. I wish I didn't have to play ads, but it's really the only way I make money doing this. So, you gotta get like an ad blocker or something.
About eBay, and we're going to take a break and come back and do that. Talk about what's really happening. I have a final question from the audience that I promised I would put to you, and it's from GameStop shareholders. A lot of GameStop shareholders have asked about the warrants that
What GameStop shareholders are like worried about the warrants? I swear this dude just got his like questions from Reddit, bro. I swear this dude just got his question from Reddit. Like, no real GameStop shareholder gives a fuck about those warrants. You either sold them and took the free money, or you're still holding them and you don't. I mean, I don't care if they expire worthless personally. Like, if you're worried about the warrants, you should have took profits. You should have took profits if you're worried about the warrants, but there's no real GameStop shareholder worried about the warrants, I don't think. I swear this dude got a bunch of his questions from Reddit.
expire in October, you know, another recent or relatively recent financial transaction from the company, what should they expect happens with those warrants between now and October of this year?
I don't have a crystal ball. I can't answer that question.
Okay. Their expectation is that when they expire, I think the date's October 26th, that's the outcome.
Lock in growth without locking up your money.
See, even I get a bunch of ads. Ad Central on YouTube. So many ads. What's up, Zone Best?
And people that have invested alongside me when it comes to Chewy or GameStop and me committing...
Nah, I disagree, Ober. If you didn't sell the warrants at $4, there's literally no point in selling them now. You could be on the last week of the warrants, and if GameStop shares are trading at like $34, $35, it's still gonna, those warrants are gonna be worth $2 or $3. So, I disagree with that. I don't think that's a good suggestion. If you didn't sell the warrants at $4, there's no fucking point in selling them. I mean, unless you need the money, you do whatever you want. It's your stock account, but I don't think there's any reason to sell the warrants if you didn't take profits at $4. Literally only been adding $50 per week on my stack, and it's added up pretty damn fast. Hell yeah. That's pretty much how much I'm putting in these days. Sometimes less, sometimes more. Just depends how much money I have, which lately it's not a lot. I mean, shout out to Double Prizes. Double Prizes has blessed up the stream, and a lot of other people. A lot of other people have been donating memberships, and I really appreciate that. Really appreciate that, especially right now. He should have said warrants cost $10 more than they do now. Nah. That's manipulation. Probably get sued for saying something like that. But the warrants aren't worth that much. Like, So to even say that is that, you know, that's not real. The warrants are worth what they're worth. Time decay. This is why you don't trade options. What's up, Justin? Like I said, if you're worried about the warrants, I don't think you're a real GameStop shareholder. That's all I can say. The warrants are irrelevant. If you didn't take profits at $4, I don't know why you care about the warrants now. You have more than me, but I'm still in the... No need to put a bunch at the moment, but I'm still adding. Yeah, you just gotta put in what you can, right? I've been burned before doing options. Everyone has. Because GameStop shares haven't moved. Unless you got lucky and bought options right before the 5 or 6 rallies you've had the past 2 years, you didn't make money on options. And in a lot of cases, most of those people probably didn't make money on options because they probably didn't take profits. Some people bought a lot of warrants and have well beyond what they received for the shares they owned. Well, I mean, that's what they get for thinking they're smarter than the market. If you're buying options, or, I mean, warrants are basically options. Like, if you're buying that type of stuff, you're basically just saying that you know more than the market and that you can time the market. And no, but I literally haven't seen a single person in the GameStop community who can time the market. It's not even realistic.
$500 million into eBay. They've done very, very well. So I don't have a crystal ball. I can't predict the future, nor can anyone that I've ever met. But
oh, wait, what was that, Ryan? Can we replay that?
Can't predict the future, nor can anyone that I've ever met.
Wait, one more time? One more time, Ryan?
Crystal ball. I can't predict the future, nor can anyone that I've ever met.
Oh, that's weird. That's weird, Ryan. All the fake traders and fake investors on YouTube think they can time the market. What do you mean you haven't met someone who has a crystal ball? What do you mean, Ryan? Everyone on Twitter's a genius. Everyone on YouTube who talks about GameStop's a genius. What are you talking about, Ryan?
But GameStop is a business that was on the brink of bankruptcy, and everybody was betting against it for good reason. And now the company is making more money than it's ever made in its history.
All right, I think he's back.
Big tech with GameStop.
Oh yeah, see, I had to combine the two clips. It worked out though.
CEO Ryan Cohen. Let's put the eBay deal, potential deal, aside for a moment. Whatever happens with eBay, GameStop's still one of the biggest names in gaming. I get a lot of questions about that. And Ryan, if you're up for it, let's start with Grand Theft Auto 6. You know, it's expected to be one of the biggest entertainment launches ever. You go to GameStop.com, pre-orders are available. What are you seeing? What are customers telling you?
Ed, I want to go back and talk about eBay.
I think that's so funny. He's like, no. We must talk about eBay. I don't give shit about Grand Theft Auto 6. Grand Theft Auto 6 stupid. Nobody care about Grand Theft Auto 6. It's digital. Nobody like digital game. We want a physical copy of Grand Theft Auto 6. No. We talk about eBay. We talk about eBay now. This is I'm the captain now. I'm the captain now.
I want to know if you wanted to build the $1 trillion business, and
dude, that part is crazy, man. That part is crazy. If you wanted to build $1 trillion, dude, how does that not get you excited, bro? Right? $1 trillion business? $1 trillion? GameStop's a $10 billion business right now. 10 billion market cap on the stock. $1 trillion? $1 trillion? Isn't that like 1,000x? Isn't that 1,000x from here? What's $1 trillion? That's $1 billion divided by 10 billion. Oh, 100x. My bad. 100x. 100x. What's 100x of 100,000 bucks? Isn't that like 10 million? So, potentially 100 grand in the future is worth 10 million if Ryan actually does this. Shoo! Heater. Heater. He cares about Grand Theft eBay. Grand Theft eBay. Hell yeah. I love that. Grand Theft eBay, he says.
I don't know, if you wanted to build the $1 trillion business and you had the existing management team, guy running the company makes $30 million a year, hasn't bought a single share in the open market, and then you have someone that's committed $500 million, me. Barry said we don't have to talk in hypotheticals. Who's more competent and capable of building a larger business? I want you to look your viewers in the eyes and tell them, are you going to bet on an entrenched management team running the business or me, someone that went head-to-head against Amazon, selling 30-pound bags of dog food, turned around a very tough situation at GameStop, and now the company's making lots of money? I
want you to look your viewers in the eyes. Dude, I think that this interview is hilarious, man. This interview is hilarious, bro.
Really want to know your opinion.
Ryan,
Dude.
I'm not here to answer the question. The audience doesn't care what I think about this deal. They're here for you. But the link to Grand Theft Auto 6, for what it's worth, GameStop has 2,200 stores across the jurisdictions it operates.
Ryan just starts like his little smile. Who cares about Grand Theft Auto 6, man? No physical disc. That's just a straight thumbs down. I need to go to the bathroom. I'll be right back.
Right? It sells hardware, video games, consoles that are going diskless at some point. You need to hire people for those stores. People are looking at what they know about the proposed structure of this deal that's on the table and trying to understand, in part, what you talked about earlier, right? Taking the costs out of the combined business to understand what the plan is here, what the master plan is for the combined entity. So let's go with that. Like, what is the synergistic play here between eBay, the e-commerce business, and GameStop, which right now is a brick and mortar business selling video games, consoles, collectibles?
You, just you.
Oh, what do you know? An ad.
On base 44.
How what a surprise.
We are going to unlock live commerce. We're going to use the stores for same-day authentication. I'll give you an example. Let's just talk about trading cards right now, right? The biggest issue on eBay is fraud. So they've done really well on authenticity guarantee because when you buy an item now and it's got the AG certification, it's legit. It's going through a centralized model right now. So the sellers shipping it costs a lot of money. There's a few fulfillment centers, takes some time, and then it goes to the buyer. Can ultimately go, once these businesses are together, we've got 1,600 nodes. They're within a 15-minute drive of 80% of the population, and you can authenticate the item same day for cheaper. So that's just one item. Live commerce, the business is getting smoked. Live commerce is a $1 trillion addressable market. It's really, really big in Asia. There's some competitors in the US that are doing very, very well.
I think that's funny. Ryan's camera starts lagging and they start playing Grand Theft Auto trailer. It's kind of funny. What's up, B-Dub?
eBay is not doing very well. So the ability to go and use our nodes as studios and as fulfillment and logistics for content creators is huge. And then we have a bit of experience in gaming when it comes to the buy, trade, and sell, the buy, sell, and trade model. So the ability for us to use eBay's rails to build out an in-game digital marketplace is huge. So those are just some of the opportunities to take this business and build it into something that the existing management team on a standalone basis can never do.
So the situation is collectibles.
What's really crazy is, he's talking about $1 trillion business. I think that's 100,000%, right? 100x, 100,000%. Walmart's up 500,000%. Apple's up like 300,000 or 200,000. Microsoft's up like 400,000. Like, there's a lot of stocks that are up hundreds of thousands of percents since they IPO'd. Like, is 100x all we're really going to expect? I don't think so. Yeah, I think if a $1 trillion company is in the works, I think the gains are going to be much higher than that. Because in my mind, when Ryan Cohen says $1 trillion company, it means they're going to have like hundreds of billions of dollars of cash, and like the assets and everything combined is going to be $1 trillion, not just the market cap of the stock. Like Apple, Microsoft, Tesla, those are only companies with like a few hundred billion on their balance sheets, and they're $1 trillion market caps. Like, what's gonna happen if the market starts pricing in GameStop that way, or GMeBay, I guess? Like, that's interesting. What happens if we do end up having like $1 trillion in 40, 50 years, and the market cap's like 4 or 5 trillion on the stock? Like, that would be nuts. That'd be absolutely insane.
Are clearly a central part of the plan, right? If this deal goes through, the combined entity. On gaming, it sounds like you are preparing for a world where gaming is diskless. There will be a trade-in, second-hand trade-in, but this is the umbrella point, right? Like, if the hardware makers, Sony, Xbox, are reportedly moving to diskless on the console side, future game launches are digital only, where does that fit in for your business plan in the combined entity?
It doesn't matter. It doesn't matter at all. Software, it mattered in the past. Software today makes up less than 12% of the business, and collectibles makes up over half the business. So it's totally irrelevant.
Dude, saying Grand Theft Auto is irrelevant is crazy. Or, physical or digital gaming. Saying digital gaming is irrelevant is hilarious. Because that was the argument for the longest time. GameStop's gonna fail because of digital games. Ryan's telling you it's irrelevant. So I think that's pretty funny, man.
Is there anything that you learned from the NFT marketplace experiment at GameStop that you think you can put into practice if the deal goes through in this combined entity? What was the takeaway for you from that?
Have you ever wanted to see your home?
Oh my
from
gosh,
space
an ad?
with this free-
No way, an ad? Wow.
GameStop has looked at digital business lines outside of the physical world. What did you learn from GameStop looking at those markets?
Do you know how much money GameStop is making today?
Please.
$143 million in Q1, highest operating earnings in the company's history.
There was surprise at the strength of earnings recently. But again, the audience
because everybody in the media wants GameStop to fail. Explain that to me, Ed. Why everybody in the media, in the mainstream media, wants GameStop to fail. There's nothing more American than GameStop committing its balance sheet and this company, which is a great American company, eBay, being aligned with shareholders. That's how this country was built, is risking your own capital. And if the business succeeds, you make money. And if the business fails, you lose a lot of money. And what I want to understand is why everybody wants GameStop to fail, both its core business and in this transaction. What world do we live in where we're betting against, we're rooting for an entrenched management team that has no skin in the game, and someone that's risking their own capital, and there's nothing more American than that? You want us to fail. I want to understand that.
Ryan, I'm a technology journalist. I host the tech show on Bloomberg. When this deal broke in May, I and my team invited you onto the show, and it took a number of months. You're now here on the show. And in advance of you coming on the show, I posted on social media that you were coming on the show. I always give our audience the opportunity to ask their questions. That's what we're doing here, giving you an opportunity to present. I think that the one outstanding thing is people asking, when will they see a sort of codified plan from you, a business plan presented for this combined entity on paper? You've explained a bit of it in the course of this conversation, but that's why the audience is here, to listen to you, to explain the future of a business that is a combination of GameStop and eBay.
Well, I'm going to bring that plan directly to shareholders. It's not going to be.
Oh, dude, I didn't catch that part. He's going to bring that plan directly to shareholders. So you're not going to see the plan or the eBay plan until they're ready for the shareholder vote, potentially. Huh.
Through a TV show, you can count on it. It's going to be directly to shareholders.
And do you have a timeline for that, Ryan?
We've had an influx of parties that have come to us, and they're interested, and in due course, the plan is going to be made public. But
in the short term, I'm going to ask you,
building a much larger business. I mean, you know, what is the goal of business? What is my goal? I own a lot of stock, and I don't have any perverse incentive. So it's to make the business a lot more profitable and to maximize shareholder value. So that's the plan. It's not that complicated. And I've spoken about huge growth areas within cutting costs. That's just short term. But live commerce and building out an in-game digital marketplace. So I've shared that with you. But everyone in the past have said, well, what's the business plan? What's the business plan? But they only do that with GameStop for whatever reason. Well, you know what the business plan is? It's to make money. GameStop.
Yes. You know what the business plan is? It's to make money. Fuck bitches. Get money. Fuck bitches.
Just reported its highest earnings in the company's history with a fraction of the stores. And everybody in the media said GameStop was going to fail. So the plan is to make more money. The plan is to maximize shareholder value. Am I going to go and share my proprietary plan and every single detail and give it out to my competitors? That'd be a pretty stupid thing to do.
Oh, I fucking love Ryan, bro. Dude. Whew.
Ryan, we have literally 30 seconds left in the show. Again, are you prepared to raise your offer for eBay? You've set out your vision, but the action you're willing to take to do it.
I'm not going to call my shots, but we're coming for eBay one way or another.
Ryan Cohen, CEO of GameStop, an extended conversation on Bloomberg Tech. Thank you for your time.
Wow.
So that does it for this edition of
Wow,
Bloomberg
chat.
Tech.
That was really good.
Recap.
Huh. Pretty interesting. Do we watch it again? Just kidding. Well, I've watched it a bunch of times now at this point, having to make the video and everything.
Have all the MTG sealed products.
Oh, man. Oh, man. Oh, man. What time is it? 12:18? We still got quite a... I guess I got on stream a little early, huh? Oh, look at my subscriber number, chat. Look at my subscriber number. shout out to Rosh. I don't know where Rosh has been, but he's the one who pointed that out. It's 14,704. Well, now it's 14,741. It used to just be 14,700. Look at that. That's pretty cool, right? Moas and the subscriber number. Could you imagine if GameStop just started going up? Like this was the floor, and it was just like perfectly correlated with my subscriber count. Like that would be hilarious, right? I don't know. I don't know how relevant my subscriber count is, but it is kind of funny, right? I don't think my subscriber count is really relevant at all, but it's still funny. It's rising, and I'll be ready for my mod position when you need it. Nah, the only person who gets mod is Moose. If I ever need mods, he's the one who truly earned it. We spun the Moose wheel, and he won. But I don't think I'll ever make people mods. I think it's too much of like a hierarchy thing, you know? I want to, and also I like clapping people. I like being the one that gets to ban people and time them out. What's up, price list? I saw your message. No need to delete it, but I appreciate it, man. I just want to clap someone. That's fair. That is fair. It is fun to do. I won't lie. It is fun to do. I guess let's get you ready for Netflix earnings. I mean, I don't think they do earnings call on there. I think they do it on YouTube, right? Yeah, they do it on YouTube. So I'll have that ready. Let's see. They have their this. Keep that up. 2 hours. Oh man, I started the stream super early. Whoops. Whoops. I started the stream super early. What's up, Zeddy? Moose gonna give him the antlers. Market's still open for 1.5. Yeah, I don't know. Fuck. What are we gonna do for another hour and a half? Oh no. Oh no. Oh no. Watch the interview 7 more times? Good idea. Great idea, actually. Great idea. Let's talk about the lack of volume in GME. Personally, I don't think volume's very relevant, but if you go through all the times on the chart, the volume is below 2 million or even below 3 million in a lot of cases. Probably like below, whatever. Either way, anytime it's been below 2 million, it's kind of been like a bottom on the stock in a lot of ways. In some cases, you've seen the stock sell off after low volume, but pretty much every time there's low volume, you see a rally a few weeks later. But you also, like I said, in multiple cases, you see that low volume and the stock actually sells off and then it rallies. I'm not really expecting that this time, but that is just something we went through and I noticed. But yeah, I don't think volume's relevant personally. I find volume to be an irrelevant metric. I'm shopping for camping gear, misplaced a whole bag of it from last year. Ah, are you going camping this weekend or something, Moose? I'm actually not kidding either. It's like natural blue chew. Wait, what? Let's talk about Facebook Marketplace and how eBay and GameStop combined can eat up that market share and create a new social platform for trading in person or through the store nodes. That is pretty interesting. I don't really know what to talk about that, but that's definitely an interesting idea. Never really thought about that. I assume. I mean, you can already do like local pickups and stuff on eBay. I don't know if you know that. You can already do like local pickups and stuff like that. But that would be interesting if they did create it into like a social platform. That'd be very interesting. Off to the mountains tomorrow. Got the bear spray ready. Make sure you get your bear circle, bro. You better have your bear circle ready. That spray's gonna do nothing. You need the bear circle. Or sea bear circle, I guess. What is that? Oh, I guess it's a SpongeBob thing. It's a SpongeBob thing. The sea bear circle. We can watch the interview again, I guess. Why not? Let's watch the Bloomberg one. See if I missed anything, which I don't think I did. Oh, they even got a short going. Look at them go. Oh, it's right here. Damn, they got 2K views on their shit already. Mine's got like 50. Someone share my someone. I don't think there's anyone from Reddit here. If you are from Reddit, feel free to share the video I posted, the Ryan Cohen interview. I don't want to meet any of these people at the store, but if it helps the company I'm in. Facebook Marketplace is huge for resellers. Oh yeah, for sure. It's because there's no like fees or anything if you go meet in person. But if you sell, I don't think I've ever sold anything on Facebook Marketplace. I've listed something on there before, but I never sold it. What if a store becomes the trade point and everybody stays safe? Yeah, that's actually really interesting. Having a legitimate place to meet up and do the purchase, whatever. And then that also brings foot traffic into GameStop, so maybe you buy something on your way out or something. Just don't go near Canada, Moose. The fire is out of control in Michigan right now. People are wearing masks and shit. Moose is from Canada. Moose is a Canadian bred and born, I believe. He's a full-blown Canadian. It is an interesting idea. Kalaluka. What's up, Kalaluka? How you doing, man? Clear skies, Western Canada. Nice. Let's go. All right. I guess let's watch this again. I don't know. I don't know why we're watching it again, but we're gonna watch it again, I guess. I just don't know what else to do. Like, there's no news. There's nothing to talk about. I mean, I'll skim through news for a second, but there's nothing to talk about. Trump is set to deliver an election-focused national address. Well, thank you. Short sellers load up against SpaceX as stock drops below IPO. What is SpaceX at? SpaceX is getting clobbered, isn't it? You know, there used to be a guy, I don't remember who it was, but there used to be someone who would come in here every single day and talk so much shit because Open Door went from like $2 to 10. It hasn't been up since then. Ever since then, I haven't seen this thing move. But literally, there used to be someone who would come in here every single day and talk shit because this stock was up. They're like, it's going higher. Oh, really? Yeah. It definitely went higher. It definitely went higher. Is this it? 131? Yeah, it's down quite a bit. I mean, easiest short ever. Literally the easiest short ever. Trump Media launches paid data service to help Wall Street track Trump posts. That's dumb. Yeah, I don't think there's any like actual news. Wait, is Mr. Beast on Joe Rogan? Mr. Beast is on Joe Rogan? Rojogan? Oh, hell yeah. At least there's something to watch. Mr. Beast. 6,000. And JD Vance. Hell yeah. Something to watch. Thank God. Thank God. Something to watch. Florida man arrested for $220K video game malware scam after FBI tracks his Uber Eats order. Okay. Yeah, we went through all this news earlier. Nothing there. At least there's something to watch. At least there's something to watch. I thought we were going to lose Ryan Cohen interview marathon stream. I gotta walk by people now and tuck it in my waistband. Jeez. Let's watch it again and focus on body language. Can't complain. Think the interview was pretty good. Oh yeah, it's definitely one of the better ones for sure. I may buy SpaceX after all the people are allowed to sail, mainly because I feel comfortable betting on Elon, just like I do with Ryan. SpaceX is just overvalued. That's the only issue with SpaceX. I would never say it's like not a good business or whatever, but it's so overvalued. You're still at 1.7 trillion market cap. Like, it's not worth that. I don't think it's worth that. I don't even think that's close. Maybe get rid of the trillion. You know, maybe 700 billion. It might be worth that, but trillion? No, I don't think SpaceX is worth a trillion. But we'll see, I guess. Let's watch it again. This time, top off and baby it. I think it's gonna sell off a bit when people are allowed. Yeah, probably. I don't know anything about that. I haven't really paid attention to that stock. I just think it's overvalued. Alright, I guess let's watch this again. Why not?
One of the biggest potential deals in technology is GameStop's attempt to buy eBay. In May, the video game retailer and its CEO, Ryan Cohen, launched an unsolicited $56 billion bid for the e-commerce platform. eBay rejected the offer, calling it neither credible nor attractive. Since then, Cohen has scrapped a controversial multi-billion-dollar pay package, and GameStop shareholders have approved increasing the company's authorized share count, giving it more flexibility to pursue strategic transactions. So where does the deal stand now? Ryan Cohen joins us on Bloomberg Television and Radio. Ryan, thank you for your time and good morning. Welcome to Bloomberg Tech. On the long list of things that have happened since May, our audience just has a very simple question for you, which is what's changed? What's developed in that period of time?
There has been a complete failure by the media to explain why this transaction makes sense. And so, number one, my track record. Chewy and GameStop, it speaks for themselves. My alignment with shareholders, I'm putting $500 million of my own money into this transaction. The high margin growth opportunities for this business within live commerce, which the company has not been doing well, and using GameStop stores as nodes for both the marketplace and live commerce is huge because the business today in live commerce is tiny. Then building out a digital marketplace for in-game items, those are just like some of the high growth opportunities within the business. And then
I still want to know how he's gonna, put that 500 million into the deal. I assume he's gonna buy shares off the market, but who knows? Let's watch it in reverse and look for subliminal messages. Remove shirt, opens baby oil. Oh, that's insane. I'm making a BLT right now. I got leftover bacon from yesterday. It's gonna be delicious. Enjoy the interview, why I do that.
there is the cost takeout opportunity. I've committed to taking out $2 billion within the first year, and that's just the beginning. So this whole narrative that the business is going to be too leveraged is a fantasy invented by the media, and it's just simply not true.
On the banking side,
Navan, the #1 rated business travel platform, lets your team book work travel in one place. Flights, hotels, cars, while staying within budget
an
and
ad.
earning professional rewards.
What do you
right now, they
know?
could be giving you
An ad.
let's go there. You lined up some banking support, right? And I think that one of the concerns that Moody's put out there as an example was the credit rating and the credit worthiness of the combined entity. So again, another question from the audience is, explain the banking support that you've secured since May, but also that concern that the debt component of it, what the credit negative outlook would be for a combined entity based on the plan that you've just outlined.
We have a highly confident letter from our bankers. We have a lot of parties that are interested in this transaction. And the most important thing, ultimately, if we can't get the debt, then it means that eBay can't get the debt, and eBay can get the debt. So this entire narrative is simply not true.
I didn't explain that question very well, Ryan, if I'm self-reflective honest about it. So I'm just going to go back to it. Your financing letter is from TD, right? And it was widely reported to depend on the combined company maintaining investment grade credit rating. And then Moody's came out and said that this deal would be credit negative for the combined company. Have you taken steps to address that?
Nobody has reached out to us, including the credit agencies, but the pro forma company is going to be investment grade.
We talked at the beginning of the conversation about shareholders increasing the company's authorized share count. Does that allow you to do something new that you couldn't have otherwise done in the context of the eBay deal?
Yeah, I mean, yes, it does.
And what would that be?
Buy the business, buy eBay.
I posted on X that you were coming on the show, and in the context of what you've done with financial mechanics of late, the question that existing GameStop shareholders sent to me over and over again is, you're asking them to accept pretty significant dilution. And they're basically asking, what's the payoff for them in accepting that dilution?
There's different forms of dilution. Most dilution is dilutive to shareholders. When you're buying a business and I've committed to pulling $2 billion of costs out. So if you do the math, I'm buying a business for $56 billion, and the business is forecasted to make over $3.5 billion. That's the consensus for 2026, plus what I would be pulling out in cost. So you're at over $5.5 billion of EBITDA, and then the ability to take this platform and build a much, much larger business. The upside is huge. So I wouldn't go and buy a business if I didn't think I can take it from 56 billion and turn it into multiples larger. So it's accretive to shareholders, but most of the time when companies are issuing shares, it's dilutive and earnings per share goes down. In this case, it's a different story. But most of the time, you have management teams. A good example is this company that collect tons of risk-free compensation and they're not aligned with shareholders. In this case, that's not the case.
You have the letter from TD. You said earlier you were going to put $500 million of your own money into this transaction. Outside of that, is there any other financing support, any other parties that since mid-May you've pulled into it?
We've had a lot of parties come to us, and there's been a lot of interest from the capital markets.
We're live on Bloomberg Television and Bloomberg Radio with Ryan Cohen, the CEO of GameStop. We're talking about Ryan and GameStop's bid to buy eBay. Really simple question. Has anyone from eBay, the management team or the board, reached back out to you or responded to you in this interim period?
No, I hope they do, but they're entrenched and they're hiding behind their advisors.
If I go to teddy.com on any browser, I'm diverted back to GameStop.com. Why?
I'm focused on GameStop.
The root of the question is, let's say that you proceed with this. There's a very wide range of opinion, speculation basically. Why does Ryan Cohen want to buy eBay? At one extreme is the idea that you just want to be the CEO of eBay rather than GameStop. At the other end is the idea that you have a bigger plan, a master plan. You kind of talked about it a little bit earlier. But what's the reality here? What is the bigger picture for a combined entity? Or referencing Teddy.com, there's some history there, but a sort of conglomerate, a holding company.
If you need more hours
Good
in the
old
day,
ads.
eBay is a platform that I can build into something much more profitable and much larger. The ability to take GameStop stores and our experience in gaming and refurbished tech and collectibles combined with eBay and be a leader in live commerce, build out an in-game digital marketplace, use the stores for same-day authentication, and ultimately pull out significant cost. And none of these things come at the expense of growth. It's actually the opposite. The more efficient you get, the easier it is to grow. It makes too much sense. So that's why I want a business. That's why I want to buy it. It's not that complicated. There's such overlap between the businesses, and my experience is in e-commerce.
Right. Are you prepared to improve the offer, Ryan?
I'm not going to negotiate against myself.
But that might be what it takes.
We'll see what happens, Ed.
You've talked about this a little bit recently. A lot of people point out to me you've done a number of interviews in quick succession, right? What happens if eBay just keeps saying no?
Ultimately, it's going to be the owners of the business that are going to decide who is more competent, who's more aligned with shareholders and who's more capable of building a much, much larger business. So the management team can only hide for so long. And I would love for this to be a collaborative process and a consensual process. That's my preference. That's number one. But
Right.
if that doesn't happen, then it's going to be shareholders' decision because they're the owners of the business.
Right. I do want to talk a lot more about the GameStop business, a lot more about eBay, and we're going to take a break and come back and do that. Talk about what's really happening. I have a final question from the audience that I promised I would put to you, and it's from GameStop shareholders. A lot of GameStop shareholders have asked about the warrants that expire in October. You know, another recent or relatively recent financial transaction from the company. What should they expect happens with those warrants between now and October of this year?
I don't have a crystal ball. I can't answer that question.
Okay. Their expectation is that when they expire, I think the date's October 26th, that's the outcome.
Ed, people that have invested alongside me when it comes to Chewy or GameStop and me committing $500 million into eBay, they've done very, very well. So I don't have a crystal ball. I can't predict the future, nor can anyone that I've ever met. But GameStop is a business that was on the brink of bankruptcy. And
I actually don't agree with that. You know, what he says here.
When it comes to Chewy or GameStop and me committing $500 million into eBay, they've done very, very well.
See, I don't agree with that because unless you invested before the squeeze, you haven't made money on GameStop. Unless you're a trader. You know, if you're a trader, you've probably made money on GameStop, but if you invested at all prior to the squeeze, you didn't make money on this. Unless you bought in the what, like 6-month window it was down prior to 2024, or the like week or two it hit like $15 after the squeeze. Here, let me pull up a chart here real quick, because I really don't agree with this. Yeah, or if you've been trading options. Yeah, I mean, you definitely profited if you've been selling options. If you've been buying options, you probably haven't made shit. But I mean, sure, if you've invested at the lows the past like 2 years, maybe you're up like a little bit, you know, you're up like 10-15%. But I mean, the only way you made money is if you bought in this window here from April 2020 or the beginning of May 2024 to basically what, like June 2023? I guess if you bought in March 2023. So you could have bought in this little window here from the beginning of 2023 to May, but you would have had to buy on the lows. If you bought any rallies, you're not up on this investment. You would have literally had to buy the lows between the beginning of 2023 and May 2023. If you bought any of these rallies, you're not profit. But then you had, you know, the opportunity from August 2023 to basically April 2024, May 2024. So what is that? That's like 6 to 8 months, 6 to 7 months. So you had a 6 to 7 month window here to purchase. Like 5 months here. You could have, I mean, even if you bought in the lows of 2022, like January 2022 to May 2022, if you bought in those lows, you're not profitable on this. So I really disagree with that, man. I really disagree with that. I bet a majority of people in this stock are not profitable. Guarantee it. Unless you bought at these, like, those few significant moments and you bought at the perfect time in those moments, you're not up on this. So that's just so wrong. That's just so wrong. Like, sure, if you've been investing since Chewy, if you've been investing since Chewy, or before Chewy, whatever, and you've been following Ryan this whole time, yeah, you've been crushing. But anyone who's bought the past 5 years, you're not making money. Unless you're a trader. If you're a trader, you made money. Yeah, I just don't agree with that. I don't agree with that. I just don't agree with that. Technically, I'm down, but never more than $3 per share and never higher than $1 per share, 21 to 24. I mean, on one of my accounts, I'm technically down. The other two accounts, I don't know how much they're up. So I don't know if how much that one account is down is like outweighs how much the other accounts are up. I might be like break even on the investment. Well, besides when I traded it, obviously, I made quite a bit of money trading it before I actually started investing. But yeah, I don't agree with that. I just don't agree with what he said there. Like, majority of people who are invested in this are not profitable. 6 months, a year or two from now, will I be saying the same thing? I don't know. We'll see. But for him to say that is just kind of inaccurate. Guarantee people on X are going to take that line and say, look, he's admitting he's working with Wall Street to make them money because who else has he helped? I mean, even a lot of the institutions didn't make money because GameStop was trading more than even prior to the 2020 squeeze. I think you hit $20, didn't you? I guess not. I guess the high was 15. So, I mean, yeah, sure. If you invested any time before 2020, you're absolutely killing it. But who was in this stock before 2020? I mean, it was institutions and stuff. It probably wasn't really retailers or retail traders. But yeah, I don't know. I can't, like, usually I'll glaze Ryan Cohen and I'll give him the benefit of the doubt, but for him to say that anyone who's invested in this has killed it or whatever he said, like, what exactly did he say?
Okay, their expectation is that when they expire, I think the date's October.
Me, when it comes to people that have invested alongside me, when it comes to Chewy or GameStop.
Yeah, see, I mean, the people that did invest when Ryan invested, whatever, yeah, they're doing well. But anyone who invested after the 2020 squeeze, you didn't make money on this unless you were a trader, like, plain and simple. If you were purely an investor and you didn't trade this position the past 5-6 years, you didn't make money, bro. I went heavy in the beginning and only adding much smaller amounts since due to less power, so my cost average is high. Yeah, I mean, a lot of people's cost averages are high, so I don't know why he said this.
Up and me committing $500 million into eBay, they've done very, very well. So I don't have a crystal ball. I can't predict the future, nor can anyone that I've ever met. But
I mean, I can agree with that part. Nobody can predict what's going to happen, but for him to say people who invested with him have done really well, not the past 5 years, unless you were really good at timing the market. But he literally right after he says that, he says, I haven't met a single person who has a crystal ball. So you really think a lot of people timed those bottoms? Probably not. So I can't get behind that. Like I said, I normally glaze Ryan Cohen and everything, but I can't get behind that. He's kind of full of shit there.
GameStop is a business that was on the brink of bankruptcy, and everybody was betting against it for good reason. And now the company is making more money than it's ever made in its history.
Whatever happens with eBay, GameStop's still one of the biggest names in gaming. I get a lot of questions about that. And Ryan, if you're up for it, let's start with Grand Theft Auto 6. You know, it's expected to be one of the biggest entertainment launches ever. You go to GameStop.com, pre-orders are available. What are you seeing? What are customers telling you?
Ed, I want to go back and talk about eBay. I want to know if you wanted to build the $1 trillion business, and you had the existing management team, guy running the company makes $30 million a year, hasn't bought a single share in the open market, and then you have someone that's committed $500 million, me. Very so we don't have to talk in hypotheticals. Who's more competent and capable of building a larger business? I want you to look your viewers in the eyes and tell them, are you going to bet on an entrenched management team running the business, or me, someone that went head-to-head against Amazon, selling 30-pound bags of dog food, turned around a very tough situation at GameStop, and now the company's making lots of money? I really want to know your opinion.
Ryan, I'm not here to answer the question. The audience doesn't care what I think about this deal. They're here for you. But the link to Grand Theft Auto 6, for what it's worth, GameStop has 2,200 stores across the jurisdictions it operates in, right? It sells hardware, video games, consoles, that are going diskless at some point. You need to hire people for those stores. People are looking at what they know about the proposed structure of this deal that's on the table and trying to understand, in part, what you talked about earlier, right? Taking the costs out of the combined business, to understand what the plan is here, what the master plan is for the combined entity. So let's go with that. Like, what is the synergistic play here between eBay, the e-commerce business, and GameStop, which right now is a brick and mortar business selling video games, consoles, collectibles?
Oh, an ad. What do you know, an ad? Maybe he's talking about the few people that are on the board. Maybe. Maybe. I mean, I'm sure there's a lot of investors from 2020. Like, I can't say that there's not anyone who's still invested in this from 2020 who hasn't made money, but I would say a majority of people lost money on this investment and are probably down on their investment if they are still holding. I don't think the minority can speak for the majority, you know? I really don't. Why is there no sound? Oh,
I'll give you an example.
Consoles, collectibles.
We are going to unlock live commerce. We're going to use the stores for same-day authentication. I'll give you an example. Let's just talk about trading cards right now. Right, the biggest issue on eBay is fraud. So they've done really well on authenticity guarantee, because when you buy an item now and it's got the AG certification, it's legit. It's going through a centralized model right now. So the sellers shipping it costs a lot of money. There's a few fulfillment centers, takes some time, and then it goes to the buyer. Can ultimately go, once these businesses are together, we've got 1,600 nodes. They're within a 15-minute drive of 80% of the population, and you can authenticate the item same day for cheaper. So that's just one item. Live commerce, the business is getting smoked. Live commerce is a $1 trillion addressable market. It's really, really big in Asia. There's some competitors in the US that are doing very, very well. eBay is not doing very well. So the ability to go and use our nodes as studios and as fulfillment and logistics for content creators is huge. And then we have a bit of experience in gaming when it comes to the buy, trade, and sell, the buy, sell, and trade model. So the ability for us to use eBay's rails to build out an in-game digital marketplace is huge. So those are just some of the opportunities to take this business and build it into something that the existing management team on a standalone basis can never do.
So the situation is collectibles are clearly a central part of the plan, right? If this deal goes through the combined entity. On gaming, it sounds like you are preparing for a world where gaming is diskless. There will be a trade in, secondhand trade in, but this is the umbrella point, right? Like if the hardware makers, Sony, Xbox, are reportedly moving to diskless on the console side, future game launches are digital only, where does that fit in for your business plan in the combined entity?
It doesn't matter. It doesn't matter at all. Software, it mattered in the past. Software today makes up less than 12% of the business, and collectibles makes up over half the business. So it's totally irrelevant.
Is there anything that you learned from the NFT marketplace experiment at GameStop that you think you can put into practice if the deal goes through in this combined entity? What was the takeaway for you from that?
What does that mean?
GameStop has looked at digital business lines outside of the physical world. What did you learn from GameStop looking at those markets?
Do you know how much money GameStop is making today?
Please.
$143 million in Q1, highest operating earnings in the company's history.
There was surprise at the strength of earnings recently. But again, the audience
because everybody in the media wants GameStop to fail. Explain that to me, Ed. Why everybody in the media, in the mainstream media, wants GameStop to fail. There's nothing more American than GameStop committing its balance sheet and this company, which is a great American company, eBay, being aligned with shareholders. That's how this country was built, is risking your own capital. And if the business succeeds, you make money. And if the business fails, you lose a lot of money.
Amazon.
And what I want to understand is why everybody wants GameStop to fail, both its core business and in this transaction. What world do we live in where we're betting against, we're rooting for an entrenched management team that has no skin in the game, and someone that's risking their own capital, and there's nothing more American than that. You want us to fail. I want to understand that.
Ryan, I'm a technology journalist. I host the tech show on Bloomberg. When this deal broke in May, I and my team invited you onto the show, and it took a number of months. You're now here on the show. And in advance of you coming on the show, I posted on social media that you were coming on the show. I always give our audience the opportunity to ask their questions. That's what we're doing here, giving you an opportunity to present. I think that the one outstanding thing is people asking, when will they see a sort of codified plan from you, a business plan presented for this combined entity on paper? You've explained a bit of it in the course of this conversation, but that's why the audience is here, to listen to you, to explain the future of a business that is a combination of GameStop and eBay.
Well, I'm going to bring that plan directly to shareholders. It's not going to be through a TV show. You can count on it. It's going to be directly to shareholders.
And do you have a timeline for that, Ryan?
We've had an influx of parties that have come to us, and they're interested, and in due course, the plan is going to be made public. But
in the short term, I'm going to ask you,
building a much larger business. I mean, what is the goal of business? What is my goal? I own a lot of stock and I don't have any perverse incentive. So it's to make the business a lot more profitable and to maximize shareholder value. So that's the plan. It's not that complicated. And I've spoken about huge growth areas within cutting costs. That's just short term, but live commerce and building out an in-game digital marketplace. So I've shared that with you. But everyone in the past have said, well, what's the business plan? What's the business plan? But they only do that with GameStop for whatever reason. Well, you know what the business plan is? It's to make money. GameStop just reported its highest earnings in the company's history with a fraction of the stores. And everybody in the media said GameStop was going to fail. So the plan is to make more money. The plan is to maximize shareholder value. Am I going to go and share my proprietary plan and every single detail and give it out to my competitors? That'd be a pretty stupid thing to do.
Ryan, we have literally 30 seconds left in the show. Again, are you prepared to raise your offer for eBay? You've set out your vision, but the action you're willing to take to do it.
I'm not going to call my shots, but we're coming for eBay one way or another.
We're coming
I'm
for
J.K.
it.
Simmons, and this.
We're coming for eBay. I saw this video on Reddit. I don't know what it is. I've never watched it, but supposedly Bloomberg talked badly about GameStop's business in the past or something. Let's see what this is all about. This was 5 years ago. It's June 10th, 2021.
Amazon team.
Oh, I'm actually pretty impressed by them. Ryan Cohen hasn't told us his strategy, but clearly it's to expand the e-commerce offering, and every single one of his new hires has been e-commerce background, 3 from Amazon. So, very capable executives. And, to his credit, running a $20 billion company is probably a bit more complex than running a $300 million company. He's out with the old and with the new. And, all these people are, 10 to 20 year experienced in e-commerce. So they're all going to be fine. I'm optimistic that they'll actually execute well.
And yet your target is $50, right? Which is well below the $220 it's trading at now. I mean, explain the gap between Michael Pachter and...
Oh, that's crazy. This interview was when GameStop was trading at $20 billion. That's wild. That's wild. My average is higher than 27. Do we think Ryan only started eyeing eBay this year? Has this been a long-standing target? Well, in that one interview, he said he thought of the idea on the toilet, and he did post that toilet. I don't know when, but it was a long time ago. So he's probably been thinking about it for a while.
The investment audience.
I think that, as you know, a meme stock is just something where people kind of talk about what could be. And in the case of a company like Tesla, going from 500,000 cars a year to 40 million is plausible. I mean, they probably won't do it, but they could. With GameStop, the meme is that they're going to transform the business and become some type of, blockchain platform that trades NFTs. And I'm not sure how they get there. Ryan Cohen is not going to reinvent the company and turn it into Amazon. They're not going to sell a bunch of stuff. I know he's posted tweets of soft serve ice cream and Ted the teddy bear, hitting a bong. But I don't expect they're going to sell cannabis or soft serve ice cream. So the truth is, maybe they grow revenue by 10 or 20 or 30% more than I've modeled. And maybe they make $2 a share instead of $1. You can get to maybe $75, but you just cannot get to 200 unless you think revenues are going to triple or quadruple. And I don't see how they get there. When he tells us the strategy, maybe.
I mean, he did have a point, the revenues didn't go up, but that wasn't really the strategy. The strategy is to make more money, not increase revenue.
I'll accept it and agree with it and endorse it, but I cannot base, fundamental valuation on something I don't know anything about.
The GameStop memes, Michael, are out of control. My favorite is the Twitter account that is literally called Ryan Cohen is my dad. You have been covering GameStop since 2002.
Ryan Cohen is my dad? Is that still a relevant Twitter account? I don't think I've ever seen that one.
How are you watching this just incredible investor reaction?
Well, I mean, I think it's healthy for the market, for people to get excited and, to bring new entrants into the market. When I got my COVID vaccine, the woman who gave me the shot asked me what I did, and I said I work in the market. And she said, "What do you think of GameStop?" And that was mid-February. The idea that somebody sticking a shot in my arm knows about GameStop, and her kid is invested, that's awesome. So, I think anything that makes, the average Joe aware that investing is an actual thing you can do is great. And I hope everybody who is long the stock gets out before they lose money. But, it's...
Hey, I mean, he was right. When GameStop was trading at $200, that would probably... I thought this interview was going to be super negative, but so far, everything he said is pretty relevant.
Stocks go up, they go down, I don't really care.
We're talking to Alexis Ohanian later this hour, who, of course, co-founded Reddit. He's a GameStop investor. He believes in it. What's the best case scenario here? The best case scenario that you think GameStop can actually get to?
I actually need to be practical here. If Ryan Cohen had some, transformational strategy to get into the blockchain business, what did he need to buy a chain of 4,700 stores for? Like, what's the point? And, he bought the stock at 8 and he only bought 12% of the company. If he really thought it was worth $300 or $400 or $500 a share, why didn't he buy all the company? So I think there's a disconnect. And I actually think, in fact, he bought GameStop at 8, thinking he could take it up to 20 or 30 or 40, which was kind of the original Roaring Kitty, meme, Roaring Kitty thesis. I think that was right. I think it got away from him. I think his ego's gotten in the way, and now he's going to prove everybody, that he knows what he's doing. If there were a strategy, it's shocking that he hasn't told us. We were supposed to hear about this 5 months ago. What is such a secret? Do they have to kill us if they tell us? I am blown away that he's got a strategy that involves brick and mortar, and that anybody thinks it's going to take revenue up 4 or 5-fold. It's just not going to happen.
University of Phoenix has no tuition games.
Interesting. I mean, he was right about the revenue part, but who knows? Looking another couple years from now, the revenue might be higher. I mean, how much revenue is Power Packs bringing in? Like, Power Packs could be bringing in massive revenue. I wonder if anyone's pulled any of those soccer cards yet. Oh, there you go. Now people are pulling the soccer cards. Okay, I guess let's get ready for Netflix earnings. Might as well. Okay. Where'd my... Oh, here it is. Okay. Okay, what's Netflix at anyway? Haven't looked at it since last earnings. 74. Oh, wow. It's down quite a bit since they did the stock split. Kind of bearish. You actually formed a bearish pattern today, so you really need to see a rally on the earnings today, or else that's it's not really good from a pattern perspective. Huh. I don't think it's a could be. I'm sure power packs are generating so much money. Yeah, but it just depends how much money is it, what makes it relevant. You know, if it's only like $1 billion, you know, sure, that's massive, but that's I mean, from where the revenue is at right now, that's a huge increase. But if it's like a couple billion, I would say that's more interesting. Or multiple billions. What's up, Justin? You didn't miss much. We just watched the interview and you didn't miss much. Now we're just waiting on Netflix earnings. Because I don't know what else to do today. My cousin was supposed to come over and he has some stuff stored in my garage. But I haven't heard from him. I don't know what's going on there. It is what it is, though, I guess. Should you stop the stream and title it? Oh, I can change the title mid-stream. I already changed it. I already changed it. I moved around some stuff today and bought some Red Cat. What the hell is Red Cat? What are you talking about? What's Red Cat? Ah, you're good, Break Nation. I think if you refresh the page, it'll show the title change. It probably doesn't change for you unless you refresh the page. Fat kitty. Hello, kitty. I don't know what we're going to do for another hour. GameStop CEO says games are irrelevant to company. Just delivered to a house at a Chewy box on the porch. Is it a sign? I mean, everyone orders from Chewy. Cohen shut down any concerns or worry that the decline of physical games will hurt the company. Doesn't matter. It mattered in the past. Cohen's mind is set on the company's bid to purchase eBay. Though it's been rejected, Cohen doesn't appear to be giving up that fight. He also seems to blame mainstream media for GameStop's perception and that there's a hope the company fails. Are there comments on this? Oh no. Of course not. Oh, Kotaku. Everyone's focused on that. Video games don't matter. 15 minutes ago, I swear this dude is delusional. If GameStop and eBay join forces, it could potentially create $1 trillion business. And what did that one chef say? Oh yeah, and if my grandmother had wheels, she would be a bicycle. This guy needs to drop the alpha bro facade. Gamers say GameStop doesn't matter. Holy shit. People are so dumb. When it comes to GameStop, people's like brains just like shut off. There's like no like real legitimate good thoughts that come out when it comes to GameStop. It's pretty insane, actually. Everyone likes to talk about it, though, for some reason. Everyone has something to say about it. It's pretty funny. Pretty funny. And then if the stock ever squeezes, everyone's gonna be like, "Oh, GameStop! Oh, GameStop!" If the stock ever squeezes, everybody like, "GameStop's the best investment ever! I was a GameStop supporter the whole time!" Like, that's literally what's gonna happen if the stock ever squeezes. Everyone's gonna fucking dick ride so hard and act like they weren't talking shit. It's exactly what's gonna happen. Is Justin gonna let us know what a red cat is? Nah, it's probably some business or something. I think Justin trades other stocks. It's probably this. Red Cat Holdings, whatever the hell that is. Whatever that is. I assume this is what he's talking about, but... I was thinking about something the other day related to game rentals. If GME bought eBay and people can pick up purchases and sell locally, you're basically creating a rental system, but it is via temporary sales. If GME bought eBay and people can pick up purchases and sell locally, you're basically creating a rental system, but it's via temporary sales. I don't know if I get what you mean by that. GameStop should create a digital rental market. I think that would be cooler than a used digital market. See, the used digital market doesn't really make any sense, but like a digital rental marketplace, that makes a lot of sense. Like if you could rent a game for like a couple days, you know, that would be really sick. But I don't really know what you mean by that. GME's at 22. Is it me every time Ryan Cohen has an interview the stock is hurting? I don't pay attention to daily price action, so I don't know what you're talking about. If you care about daily price action, I could see why you think that, but daily price action is irrelevant. They just make drones and whatnot. I think it's going to go back up to 12 soon, so just a little play. I gotcha. Meaning you buy a game and then just take it back and say, okay, I want to resell it. And you can sell it whenever you want because you own it. I mean, that's not really renting, though. Renting is borrowing something. If you buy a game and then just turn around and sell it, that's not really renting, I don't think. That's just what people already do. Those stores went extinct. Technically, you can do that now. Yeah, exactly. I mean, people... I wouldn't consider that renting. Renting would be like just borrowing the game. I mean, like Blockbuster, Hollywood Video. I don't know if you guys had Hollywood Video. That's what we had in Utah. Blockbuster was still a thing, but yeah. Like if you could make a digital Blockbuster, that's legit. See, I want to fucking do an interview with Ryan so bad, bro. I want to do an interview with Ryan so bad. How could we get him on the show, bro? How could I get Ryan on the stream? Maybe I just need to make like a fucking list of questions and send it to him like every day until they respond. I think I'm going to start doing that. I think I'm going to start making like a list of questions to ask Ryan. And then just like literally just email it to the media or email it to GameStop every day until they respond. Let's have Roman. It's not renting, but I mean, it creates the same cycle of being able to temporarily play a game and then get rid of it. And the buying, selling would be completely facilitated for you. You got to go find a seller for each item as opposed to GameStop, eBay doing all that for you. I mean, yes and no. Yes and no. If you post on eBay, you're not really looking for a buyer. Yeah, I get what you're saying, but that's already like a thing. See, I'm gonna make a Google Doc. If you guys have any questions that you'd want to ask Ryan, put them in the chat. I'm gonna make a Google Doc. Questions for Ryan Cohen. Would you be interested in making a digital rental marketplace? Question mark. What was the other one? I know there's one. What do you think about real estate? What was the there's another question. Would you consider buying more Bitcoin since it's down 30 plus? How much? I don't know how much Bitcoin's down since they bought it. I think 40% plus since you bought it. There's another question that I wanted to ask, but I forget what it was. God, what was there was another like really good question that I talked about, but I can't remember what it is. Have you spoke to partners about creating the digital gaming skin marketplace already? I don't know, maybe the question will come back to me. I'm just gonna make a list of a bunch of questions and start submitting it. Another item is if I want to own a Wayne Gretzky rookie card, then GME could tokenize it. Let's say they have 10 owners, then each owner could trade the token. Yeah, I understand tokenization. I personally think tokenization is ridiculous, but it's something people talk about. I would never want to own 10% of a fucking trading card or 10% of a house or 10% of any. I mean, I guess technically, you own 5% of Bitcoin if you're invested in GameStop. So like, there is that, but I would never want to directly invest into like 10% of a trading card. I think that's I think that's stupid, personally. I think that's dumb. You just get scammed, most likely. I'm not interested in getting scammed. I'm interested in real investments, like GameStop or anything on the stock market, realistically. But I wouldn't be interested in doing something like that. Especially if you do it through Logan Paul. Oh. Yeah, I think tokenization is dumb. A lot of people are interested in it. I don't know why, but I think it's dumb. Why wouldn't you just want to fully own something? Why would you want to fractionally own something? It's like, would you want to own a fractional share of GameStop? Like, I think you would rather own the whole share than a fractional share. Can't afford it. I mean, why would you want it then? See, that's the whole thing, is trading cards don't produce anything. Like, you're just investing in the potential appreciation of the card market as a whole. Like, I wouldn't even be interested in investing in something like that. There's no value behind cards besides what the market puts on it. People do own fractional shares. Well, I know that, but still, why would you want to own a fractional share when you can just buy the whole thing? People do it, but I think it's stupid. Like, I think a lot of things people do are really stupid, but tokenization, fractional ownership, I think that is, like, very dumb. I've decided to sell my Pokemon cards, like all of them. Gonna make my money and get back in when it crashes. Interesting. All of them, huh? Your whole collection. That's interesting. You're not gonna keep anything? You have a lot of product, I thought. You're not gonna keep anything? It's the tech that can be sold. I just disagree. Like I said, you might think that's a good idea, but there's nothing you could say that would convince me that's a good idea. 90% of the market value. Wait. So really, you paid 10% of the market value to temporarily own it. Get it? See, I don't know. So really, you only paid 10% of market value to temporarily own it. One second. Okay. They just sit upstairs. I love Pokemon and love the chase, but there are too many people sitting in chairs and stores in the area now. Time to get mine. I'll be back when it becomes unpopular again. I have over 50k of product. Oh, nice, man. I think, like, I mean, you do whatever you want, but I think if you have, like, older boxes and stuff that's out of print, I don't know if that's worth selling. I think that stuff will always be potentially the same price as it is now. But if you have, like, a lot of newer stuff, you know, that's probably worth getting rid of. But also, you know, who knows? Who knows how the Pokemon market's going to perform, you know? Who knows how much the Pokemon market's going to perform? I think sealed product is. I mean, you know you know it better than I do. You've been doing it way longer than I have. I just I think I just don't want, like, having the regret of selling it would suck. And also, make sure you get cash, you know. Don't pay too much in fees and stuff like that. Why are you meowing, kitty? Meow. 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 Cat's always yelling at me, bro. It's always yelling at me. I haven't been able to catch your live stream in a while. Been watching all your posted videos though. Appreciate you, RL. It has been a while. Has been a while. Hope you're doing good. I do, but I paid retail on everything. Nothing I bought came from anywhere other than the stores or Pokemon Center. I'm just so far up on it all. Yeah, I get that for sure. I get that for sure. And how much is the Pokemon market actually gonna grow, you know? Like, when Ryan Cohen's telling you this is gonna be $1 trillion company, it's like, do you think Pokemon's gonna 100x? I mean, I'm sure, like, certain boxes might in a long enough period of time, but I don't know where you're gonna get 100x. And also, you could do a lot with that 50K, even beyond the market. How did you like the interview today? I didn't get to see it. I did upload it. I did upload the video of the interview. It's pretty good though. I would say it's one of the better interviews. Definitely worth watching. Cash deal, all cash, no payment apps. Nice. Hope all's well with you and everyone in the chat. Yeah, I'm doing pretty good, man. Can't complain. I mean, I could complain, but I don't want to complain. I complain enough on this stream. I have some stuff that is up 10x. Yeah, that's crazy, man. It's crazy because a lot of the gains were probably the past, like, year or two. But yeah, I mean, I hope it works out, bro. I hope it works out. They were, which is why I think it's a smart exit. Like, if it crashes again, I'll buy a ton and hold. Yeah. And I mean, as long as you're cool, like, if it keeps going up, you know, if you sell it and it keeps going up in price, as long as you don't care about that outcome, I think you're good to go. We should have GME trivia. GME trivia would be interesting. I don't know how it would work. What's up, Kenny? Hope you're doing good, Kenny. I just won't look. That's a lie. You know you're gonna look. How many outstanding shares does GME have? I don't know the exact number. It's like 448,560 something thousand. I don't know the exact number. $52-week high. I don't know. I can look. I don't think Yahoo's accurate. It's like 28 something though. My answer was gonna be 28 or something. I don't know exactly what it is. AOL might be accurate. From my experience, Thinkorswim is the only like accurate thing. Like truly accurate, down to like the penny. Thinkorswim is the only broker, platform. It's the only thing I've ever seen that is truly accurate. I wonder how close I was to the share count. I don't actually know. I had to have been close. Where's the 10Q? $448. Damn, I was pretty close. I was only off by 100,000. Like 130,000. I was hella close. What are some other questions we could ask Ryan? Ooh. Why aren't you chasing another physical brick and mortar company like Target to make a Walmart type competitor? I've always wondered if he actually like thinks about Target. He probably doesn't, but I've always wondered that. I guess we got to get ready for Netflix earnings here. People are hopping in for the Netflix. The Netflix. Wait, is this a new Warren Buffett interview? I saw this, but I thought it was just the same interview. Warren Buffett interview. There a new one? Oh, there is a new Warren Buffett interview. Nice. July 15th. Huh. I didn't know that.
Warren, first of all,
Warren Buffett. Warren Buffet. What price would he consider GME shares undervalued to start the buyback? I don't think he would answer that question, but I'll throw it on there. What price do you consider GME shares undervalued? I'll have to see what that old bag has to say later. I wish I would have spotted it yesterday. The last Warren Buffett interview I uploaded crushed. Absolutely crushed. It's like one of the best stream clips I've ever posted. I don't even remember when it was. It's one of the better ones, though. Yeah, 20,000 views. I wish I would have. I think I did try to look for it yesterday and it wasn't uploaded. Well, they uploaded it a day ago, so maybe I just wasn't looking that hard.
Warren, first of all,
What's up, Mr. Indman? AKS Tonks, what's up? You could always mass open the packs, Break Nation. just go on a pack opening spree. Start a YouTube channel. Just open boxes of Pokemon nonstop. That'd be a terrible idea, but it would be funny, especially if you pulled bangers. Pull some slappers. I just get kicked in the nuts left and right. I mean, if the YouTube videos are successful, though, it could pay for it. But it's definitely very risky. Definitely risky. There's a lot of people doing that. A lot of people opening boxes. A lot of competition. I have 151 booster bundles that are $200 that I paid $25 for. I can't open those. I mean, you could. You definitely could. I mean, let's look. Let's see. Pokemon 151. 151 rum. Pineapple juice, Malibu, keep 'em all numb. This guy, 500 views. Probably not worth it. Probably not worth it. Yeah, there's too many people doing shit like that. It's not worth it, man. If there wasn't so many people pulling packs and making videos pulling packs, it would be a really good idea, but there's just way too many people doing it. People might watch clips of me. I'd be cussing and ripping cards in half. I mean, that would be hilarious. That'd be hilarious, bro. Like, what? Just rip all the cards. Just throw all the cards on the ground and stomp on them. Just full on rage. See, that's fire. That's a good idea. That's why I'm selling off right now. Literally, it's just overcrowded. Yeah, it is. Pokemon Scalper crashes out on every Reddit page. I think you could get there. I don't think it would be worth it, man. Unless you're getting tens of thousands of views, it wouldn't be worth it. If you made a video like that and only got a few hundred views, that would suck so bad. And you can't even monetize your YouTube channel until 1,000 subscribers, so there's also that aspect. You gotta have 1,000 subs to even get monetized. You got 10 minutes till the market closes. Still have another hour till the earnings call. Hopefully they drop the earnings report semi early. I'll just drop every racial slur in the dictionary. I'll get subs fast and wind up dead. The racist card investor. The racist Pokemon trainer. We got to think of more questions to ask Ryan. If anyone has like a good question you want to add to this list that you would want to ask Ryan, put it in the chat. I'm going to try to come up with more questions and hopefully we can get an interview, man. If we could get an interview, that would be so hype, bro. That would be so hype. Like I've sent them an email before, but it was literally like a couple sentences. It was just like, how could I get an interview with Ryan? Or I don't even remember what I said, but I think if I actually sent a list of questions that potentially they would actually respond, maybe you would be starstruck. Nah, no way. I've met Vegas Matt in real life. I've met a lot of like professional skateboarders as well. I don't get starstruck. It'd be cool to talk to him though. That'd be very interesting. It'd be very interesting. But no, I wouldn't get starstruck, I don't think. I'd be thunderstruck. Blimp, 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 blimp. Thunderstruck. You've been thunderstruck. What if he started answering like he did to MSN? I'd be like, you know what, Ryan? You a little bitch. Just kidding. You think you're so badass with your 42 million shares. Fuck you. Could you imagine? Just start cussing him out. Half cash, half stock. Send a list of questions and a clear availability schedule so they have a lot to work with. Yeah, I'll get the list of questions ready. Like I said, if you guys have questions, please share them in the chat so I can throw them in, because it'll probably take a while for me to, you know, form a bunch of questions by myself. I missed the questions you already had. Not very many. Where is it? Would you be interested in making a digital rental marketplace? What do you think about real estate? Would you consider buying more Bitcoin since it's down 40% since you bought it? Have you spoke to partners about creating the digital gaming skin marketplace already? Why aren't you chasing another physical brick and mortar company like Target to make a Walmart competitor? What price do you consider GameStop shares undervalued? I just thought of one while I was reading that, but I forgot what it was already. Fuck. Oh yeah. Would you buy back Chewy if it got cheap enough? Like, all my questions are not eBay related. I probably should throw some eBay questions in there, but I'm just not. I just get it. I already kind of see the vision, so I don't feel like I need to ask about eBay really. Oh, I got a good question. Do you think Roaring Kitty was the reason the stock squeezed in 2024, or was there another factor? I don't think that's a question he would ask, but it's kind of an interesting one, right? Oh, the Netflixers are popping in. What's up, Netflixers? Hope you guys are all doing good. Appreciate you stopping in for the earnings stream today. Still got quite a while before the earnings actually starts, but we should get the earnings report here soon, and then, you know, earnings call later on. What's my position? All in GameStop, baby. That's my position. All in GameStop. Imagine Roaring Kitty doing live selling on behalf of GameStop. I think it'd be cool if they hired someone like me. Like, instead of letting, like, I think the studio idea is good, but imagine if they just hired someone, you know? Imagine if they hired, like, me, and then someone brought in their stuff, and I took it. You know, they sell it to GameStop, and then GameStop gives me the items. I sell it on the live platform, and then boom, instant churn. Like, that would be interesting. Or you don't even give them an offer for the item. You sell it first, and you take a commission for selling the item live. That would be interesting, because then you're never taking in inventory. That would be very interesting. I thought you had some Netflix. Love from Ireland. I appreciate you, Jug. I appreciate you, man. I'm really excited to seeing how they recruit streamers and celebs to host lives. Well, from what Ryan is saying, they're not, like, recruiting anyone. You know, you're going to be able to come in, bring your items, bring your phone, and do the live selling at GameStop, and then just do all the shipping stuff there. It doesn't necessarily seem like they're going to hire like someone like me to do the selling for them. Who knows though? You know, who knows? Who knows? You'd have a lot of live streams if that was the case, you know? I mean, yeah, I meant bigger streams for publicity and charity purposes. Yeah. I mean, we'll see, man. Obviously, you know, he's not giving the full plan. He's even said it himself, so who knows what the actual plan is. But I think it would be cool, you know. I would go do it. Like if GameStop hit me up, was like, "Yo, you want to work for us? All you got to do is live stream on our live commerce page and sell items for us." I'd be like, "Fuck yeah. All day. All day." All right, market's officially closed. Netflix up 1% on the day. Curious to see how Netflix performs on this earnings. You're at a very pivotal moment, or a pivotal point on the stock, it seems like. It's like you're either going to continue the bearish trend or you might pop back up. But yeah, it's a very, very pivotal earnings, so it seems, for Netflix. I don't know. What do you the Netflix people? What do you guys think of Netflix? You guys think it? Oh wait, let's do a poll. Let's do a poll. Is Netflix bullish or bearish? Bullish, bearish. I'm gonna put an I don't care option for the people who don't care. I don't care. There you go. I made the poll. I made the poll, chat. Oh, most people are bullish. 8% don't care. I like that. I like the people who don't care. Shout out to you guys. Shout out to you guys. Regarding Netflix, ask Ryan if he thinks 11 is dead or living her life somewhere peaceful. No, 11! Don't even remind me of Stranger Things, bro. Oh, what a disappointment. Stranger Things was almost more disappointing than Conor McGregor. Oh, no. Stranger Things was almost more disappointing than Conor, bro. I think the earnings is out. Netflix is up. Nope, nope. I think it's out. Where's the report? Not seeing a report yet. What's going on here? How come this isn't working? Their website is like tripping out, man. I don't see no I don't see a report yet. Let me check the SEC website. No, nothing there. The stock's reacting like they already posted. You're just not getting the report on the website yet. EPS 80 cents. That's what people are saying in the chat. Stock's kind of reacting weird. Not the best reaction. Not the best reaction. I mean, 69% of people were bullish. I don't know. I don't think you guys knew what you were talking about. Being bullish on a bearish pattern is crazy. I mean, I respect it, but why is their website being so weird? For some reason, their website is being weird, man. Hopefully, they just upload the 8K on the SEC website. There it is. There's the good old 8K. Letter to shareholders. All right. Fellow shareholders, our financial performance... Here, let me blow it up a little bit for y'all. All right. Fellow shareholders, our financial performance remains solid, and we're on track to meet our objectives for the year. Q2 revenue grew 13% year over year to $12.6 billion, and operating margin was 33%. Both were in line with our guidance. For 2026, we've narrowed our forecasted revenue range of 51 to 51.4 billion and continue to forecast an operating margin of 31.5%, both consistent with our prior guidance. We're delivering increasing value to our members. Engagement is healthy, reflecting the quality and quantity and variety of our offering. Harlan Coben's I Will Find You is our most viewed new original series, debut in 2026, and Swapped is on the way to becoming our second most viewed original animated film ever. View hours grew plus 2% in half 1/26 versus 1.5% growth in 2025, despite the competitive impact of the Winter Olympics and the World Cup this year. To better satisfy members, we're continuing to expand the variety of our entertainment offering with video podcasts, creators like Danny Go and Salish and Jordan Matter, and Cloud TV Games. The results of our recent price changes are consistent with prior changes and our expectations. We are leveraging AI to provide a more personalized, immersive, and interactive experience for members, enhance ads capabilities for brands, and improve the quality of our series and films. The entertainment industry remains dynamic and competitive. We aim to stay ahead by executing against our 3 areas of focus: delivering more entertainment value, leveraging technology to improve every aspect of our service, and improving monetization. Oh wow, the stock's clapping, bro. The stock's clapping. Bearish. Netflix is bearish, bro. That's a bearish pattern. That's a bearish pattern, bro. A higher low or a lower high in March or April. End of March, beginning of April. You just hit a lower low. Man. That sucks. That sucks. That sucks. Formed a bearish pattern on the chart. No good. Why is their investor relation website being so slow? Something's weird there. Let's see. Q2 results and forecast. Q2 revenue of $12.6 billion was in line with forecast and grew 13% year over year, driven primarily by membership growth, pricing, and increased ad revenue. We delivered double-digit revenue growth in all regions, surpassing the quarterly revenue mark of $4 billion in EMEA and $1.5 billion in both LATAM and APAC. In UCAN, Q2 revenue growth of 10% reflects only a partial quarter impact from our recent price change, which has gone well and is expected. Operating income in Q2 was $4.2 billion, up 11% year over year, and operating margin was 33.4% versus 34.1% in Q2 2025. Q2 operating income and margin were slightly ahead of forecast due to the timing of expenses. As we noted in previous letters, operating income in Q2 grew slower than revenue because our content amortization growth is higher in the first half of the year. We continue to expect content amortization to grow slower in the second half of the year and to increase 10% for 2026. Diluted EPS for the quarter amounted to 0.8 versus 0.72 in Q2 25, slightly above our forecast. As a reminder, the guidance we provide is our actual internal forecast at the time we report, and we strive for accuracy. Our primary financial metrics are revenue for growth and operating margin for profitability. Our goal is to sustain healthy revenue growth, expand operating profit and margin, and deliver growing free cash flow. For Q3, we expect revenue growth of 12%, driven by growth in memberships, pricing, and ad revenue. We project an operating margin of 33.2% compared with 28.2% in the year-ago quarter. Our 2026 outlook is consistent with our prior forecast. We are narrowing our revenue forecast to 51 to 51.4 billion, which represents 13 to 14% growth, driven by growth in memberships and pricing, and a projected and a projected rough doubling of our ad revenues to approximately 3 billion. We continue to anticipate an operating margin of 31.5% for 2026, both on a reported basis and based on Forex rates as of January 1st, 2026, versus 29.5% in 2025. Our forecast implies annual operating income growth of 20% plus for 2026. The chat's kind of dead. What do you guys think of this? What do the Netflix investors think of this earnings report? What are your thoughts, concerns? Type them in the chat. I don't know how there's over 200 people in here and the chat's dead, so let me know what you guys think. Let me know what you guys think. Where'd that go? As we outlined in our last letter, we have three main areas of focus. First, delivering more entertainment value. We want to win the most valuable moments of truth and thrill our members. We used engagement as a shorthand for the value we deliver members. But as we've developed an increasingly sophisticated understanding of how consumers ascribe value to our service, we know not all hours are equal. Time spent is just one aspect of strong engagement. Quality and variety also matter. The key is to improve across all of those dimensions: quality, variety, and quantity. Quality is defined by how much our members enjoy and love a title. We work every day to raise the bar on our core series and film offering, which we have successfully done since we launched streaming in 2007. Animation is a good example of how patient and focused execution can pay off. We started original animation in 2018, kept improving, and last year produced a true breakout global phenomenon with K-pop Demon Hunters. It became our first title to surpass over 52 consecutive weeks in the global top 10. We built on that momentum in Q2 with Swapped, 137 million views, which is loved by our members, and on its way to becoming our second most viewed original animated film ever. In addition to the high-quality slate, we also need a wide variety of programming because we serve a massive audience, approaching 1 billion people, with broad and diverse tastes, moods, and needs. Different types of content impact our business differently. Some drive more acquisition, some primarily aid retention, and some make the service feel indispensable. For example, in 2026, we expect live programming to account for just over 5% of our content spend, but only 1% of view hours. Yet, live event programming accounted for 6 of the top 10 new member sign-up days over the last 5 years, and we've only been doing live events since 2023. Quantity of engagement is also important, and as detailed in our biannual What We Watched report, in the first half of 2026, our members watched more than 97 billion hours, up 2% year over year. This was slightly faster than the 1.5% growth in 2025. Despite the competitive impact of the Winter Olympics and the World Cup this year, non-English content again drove more than a third of all viewing this half, with standout titles from Korea, Japan, Spain, and India. Our Q2 slate delivered a host of titles that our members loved and were broadly viewing, including Harlan's Coben's I Will Find You, 87 million views, our biggest new original series debut in 2026 so far, Legends from the UK, 20 million views, K-Drama Teach You a Lesson, 55 million views, which is on track to become our second most viewed Korean show globally, Berlin and the Lady with an Ermine, 28 million views from Spain, The Polygamist, 24 million views from South Africa, Flunked, 11 million views from France, and Rosario Tijeras Season 5, 6 million views from Mexico. We also continued to strengthen our film slate, delivering hits across multiple genres like action with Apex, 131 million views, starring Charlize Theron, rom-coms with Office Romance, 63 million views, featuring Jennifer Lopez and voicemails for Isabella, 71 million views, drama with the Emmy-nominated feature Remarkably Bright Creatures, 53 million views, starring Sally Fields, and documentaries with Maternal Instinct, 54 million views, and The Crash, 67 million views. Beyond series and films, we continually evolve and expand our entertainment offering to better meet the needs of members and strengthen our engagement. For instance, approximately half of our viewing occurs in the evening, but our recently launched video podcast over-index on viewing during the day and on mobile devices, an indicator that this engagement is incremental. We recently added Jay Shetty's On Purpose and Allegedly, as well as announced podcasts featuring Kate Hudson and Oliver Hudson, Lele Pons, and Martha Stewart through our partnership with iHeartMedia. Martha Stewart? We have a history of working with the most talented storytellers from around the world, and increasingly, that includes top creators from open content platforms. We've had success with creators including Danny Go, Miss Rachel, Mark Rober, and Salish and Jordan Matter, and recently announced collaborations with the Stokes twins, Alan Chicken Chow, Nick DeGiovanni, and Mythical. I know Nick. Miss Rachel has spent 27 weeks in the global top 10 since debuting on Netflix last year, and more recently, Salish and Jordan Matter and Danny Go have spent 8 and 7 weeks respectively in the global top 10 since coming to Netflix in April. We also announced partnerships with leading publishers including Condé Nast, Hearst, and People to bring their lifestyle content to members in the US and several other countries beginning in August. Holy crap, they got a lot of info here. To deepen our local programming in France, last month, we launched a partnership with leading local French broadcaster TF1. Netflix members in France are now able to experience TF1 programming as part of their subscription at no additional cost. This fully integrated experience includes TF1's linear channels as well as TF1 Plus's on-demand content, including a wide array of scripted, unscripted, and major live sports programming. While still early, we're pleased with the initial performance. Our French members are discovering and engaging with this content, with view hours of TF1 content growing each week. A TF1 title, Secret Story, has already reached our top 10 list in France, and we are gratified to see our partner is also seeing strong early results. Our cloud-based TV games are gaining traction. In June, we had our 2 most successful cloud game debuts, with the releases of FIFA World Cup Launch Edition and Unhinged, and Nflx Playground, our app for kid games, has experienced 3x growth in daily players since it launched in April, and has fueled growth in our kids' mobile games engagement, which is up 600% year over year. While off a small base, these early signals give us increasing confidence that we are building a foundation with exciting future growth potential. Overall, our engagement remains healthy, and as with all things we do, we are working hard to improve every day. We have an exciting Q3 slate, including new films like 72 Hours with Kevin Hart, The Last House with Greta Lee and Wagner Moreau, The Whisper Man with Robert De Niro, and Call My Agent from France, and series such as The Hawk with Will Ferrell, the 5th and final season of Outer Banks, Little House on the Prairie, the 4th installment of Ryan Murphy's anthology series, Monster, the Lizzie Borden story, The Gentleman Season 2 from the UK, The East Palace from Korea, The Doll from Poland, and Lovesick from Mexico. We'll continue to build out our live programming. We have 2 major baseball league events, Home Run Derby and Field of Dreams game in Q3, as well as Tyson Fury versus Anthony Joshua fight later this year. We also recently announced an expanded agreement with the NFL, securing a premium slate of games that includes a Week 1 matchup in Q3, as well as a Thanksgiving Eve game, an NFL Christmas game day in Q4, and a final week contest in Q1 of next year. Second, leveraging technology to improve every aspect of our service and our business. Okay, we still got time. To support our growing content offering, we continue to evolve our product to create more personalized, immersive, and interactive experiences for our members. We are leveraging LLMs to improve title discovery and to better understand member preferences. We are also enhancing search for our members with new voice search functionality and AI-powered natural language search. Across the production lifecycle, from concept and pre-visualization through post and delivery, Gen AI utilization by our creative partners is scaling quickly. In 2026, Gen AI workflows have been used in roughly 300 of our titles, with the largest concentration of work in post-production. We are increasingly leveraging these tools to deliver higher quality output more quickly and at a lower cost than traditional methods. In some cases, productions would have had to leave out key shots and sequences in the absence of Gen AI technology. For example, Glory India, Brazil 70, A Saga do Tree, Brazil, and the American Experiment, US, utilized Gen AI tools to create highly complex sequences, enhance crowds, historical battle sequences, and world-building establishing shots. In our ads business, we continue to invest in developing a premium ad experience which delivers highly engaged and attentive audiences to advertisers. In Q2, we expanded our AI-powered tools across the full advertising lifecycle, from planning and creative production to campaign management, optimization, and reporting. We're also automating more of the workflow around how advertisers transact with us by extending programmatic access to pause ads and live inventory this summer. This reduces manual effort that has historically limited access for smaller buyers, opening Nflx to a broader range of advertisers over time. These investments enhance the value of our existing inventory and lay the groundwork for the next phase of growth in our ads business. Is Nflix still going down? I see a bunch of people whining in the chat. Yeah, it's down. I mean, that's what happens when you invest in bearish stocks that are overvalued. Just saying. Just saying. You know, it was bullish up until pretty much July of 2025. You haven't really seen much bullishness since then. So, I don't know. Maybe live and learn. Live and learn. Try to figure out why your investment got clapped instead of just complaining about it. Third, improving monetization. Building out our ads business continues to be a top priority, and we remain on track to deliver approximately $3 billion in ads revenue in 2026. Our U.S. upfront negotiations are in advanced stages, and we expect commitments to close in the next few weeks. We are seeing strong interest in our live events lineup, Women's World Cup, an expanded NFL slate, WWE, MLB events, and more, alongside continued demand for our unparalleled breadth of entertainment titles. The growth in our ads business is being fueled by the strength and variety of our slate combined with our investments in AI-powered tools and workflows, the Nflx ad suite, and broader programmatic capabilities. We offer a wide range of plans and feature sets at accessible price points to provide the best value for members. As we expand and improve our entertainment offering, we occasionally adjust prices so that we can reinvest in our service. Our first half price changes in markets like the US, Mexico, and Spain have gone well, with the impact consistent with prior price changes and our expectations. We are constantly testing, assessing, and improving the membership life cycle. Over the years, investments in our product capabilities, TV and mobile UI, have given us greater flexibility to evaluate the best ways to attract and retain members in different markets. We've tested a variety of methods, including a low-cost first month in Japan to coincide with the WBC, and an upgrade on us offer in various countries around the world. As part of this test and learn strategy, last week we began retesting free trials for non-rejoining new members in a number of markets around the world, excluding the US and the UK. Evolving our view hour disclosures. Engagement is important to our business, but as discussed above, engagement is not just the quantity of view hours, but also refers to the quality and variety of our offering. To make this clearer, we are making a change to our view hours disclosure. After today's What We Watched report, which covers the first half of 2026, we will shift to publishing this report annually in the first quarter, beginning in 2027. The goal of separating the publication of the report from our earnings results is to keep the focus on primary financial metrics, revenue and operating profit. With this change, we will still report industry-leading titles. Whoops, I did not mean to do that. Industry-leading title by title and total view hours data, including our weekly top 10 list for movies and series in more than 90 countries. I think it's funny when larger YouTubers have their little bots come in and try to promote their channel. It's kind of funny. Cash flow and capital structure. Net cash generated from operating activities was $1.7 billion versus $2.4 billion in the prior year period. Free cash flow in Q2 2026 totaled $1.5 billion versus $2.3 billion in Q2 2025. This included higher cash tax payments due in part to Warner Bros. Termination fee. For the full year, we continue to expect free cash flow of approximately $12.5 billion and an annual cash content spend to amortization ratio of 1.1x. Our capital allocation approach is unchanged. We prioritize reinvestments in the business, both organically and through selective M&A, while maintaining a healthy balance sheet and ample liquidity, and then returning excess cash to shareholders via share repurchases. In April, our board of directors authorized the repurchase of an additional $25 billion of our stock on top of $6.8 billion of capacity we had remaining as of the end of Q1. In Q2, we bought back $4.7 billion of our stock, our largest quarter of share repurchases, and we currently have $27.1 billion of capacity left in our remaining authorizations. We ended the quarter with gross debt of $14.4 billion and cash equivalents of $9.1 billion. We have $1 billion of debt maturing later this year, which we plan to refinance. Interesting. Environmental, social, and governance. We recently published our 2025 environmental, social, and okay, there's nothing. Key updates for 2025 include how we continue to decarbonize our operations, including the productions of our films, series, and games, invest in our people and the next generation of talent around the world, while contributing to our local economies, and maintain our corporate governance structure to support healthy growth and create long-term shareholder value. During Q2, we launched the Nflx effect, a comprehensive look at the impact of our films and series have had on economies, industries, and culture over the last decade. Nflx is deeply embedded and invested in creative industries around the world, producing TV series and films in more than 50 countries, and contributing more than $325 billion in gross value to the global economy. That's pretty impressive. For a quick reference, our investor letter can be found here. We probably already read that before. And then all their numbers. Let's see, is there anything else here? I think the rest is just like their balance sheet and stuff. I mean, they're still doing well. Nflx is crushing. It's just the stock's probably overvalued, which tends to be a case for a lot of stocks on the market. A lot of overvalued stocks on the market. All right, let's read the chat for a second. I want to see what all these people were saying. BDPS, miss revenue. Don't care was also a correct answer. Hard to speak when the price is dropping. Nflx stock is too cheap to ignore. I think that's very debatable. This is good news. How come nobody mentions that the Nflx stock is literally in a bearish pattern? It's kind of interesting. Not a single person talking about how Nflx just created a bearish pattern on the stock. Pretty interesting. Down 6% stings a lot. Share my sentiment about Nflx. I think Nflx is overvalued. And that's what I said the last time we streamed about Nflx. And until I think it's fairly valued, that will continue to be my opinion. I mean, I was correct, apparently. The last earnings report, Nflix was at all-time highs in the last, or not quite all-time highs, but pretty damn close. Last two earnings reports. So, I feel like the price action has definitely proved me correct, but people on the internet won't agree with me. Because they like coping, I guess. They don't understand bearish versus bullish price action. They just, Nflix, I'm going to buy it. It's like, okay, hopefully it works. I mean, 5, 10, 20 years from now, it'll probably work out for you. But the short to medium term price action is very bearish. And if you can't see that, then I don't know how to help you. They need to stop being too woke. That has nothing to do with business. I guess a bunch of people FOMO'd into Netflix. A lot of crying. A lot of crying in the chat. Must have been a lot of FOMOers. Gonna be no Netflix and chillin' for the crowd tonight. Looks like a solid ass business to me. Oh yeah, Netflix is super solid. It's just the stock's overvalued. Doesn't matter how good their business is when their stock's overvalued. How can you expect to make money? If you're patient enough, you know, maybe it'll work out. But looks overvalued to me. I'm going to put it on my watch list. If it goes lower, I really might be a buyer. Sometimes earnings can break the downtrend. Well, that didn't happen today. It actually made it worse. And you created a lower low, so... Technicals are bad, I agree. Fundamentals and value are still there. That's very debatable. I've been saying Netflix is overvalued for the past... since I've been streaming about it. So, I mean, you can think whatever you want, but I think it's overvalued, and the market has proved me right over time. The woke comments are always so funny. The stock's going down. They're woke. They made me lose money, so they're woke. You can tell the people who don't understand the stocks by the way they talk about them. You can think all you want about the business, you know? Netflix is a good business, but the business and the stock price aren't directly correlated in most cases. The stock price can get very overvalued. The stock price can get undervalued. Is what it is. Anyone who focuses on price to earnings, I don't know how you think that's a good metric. I think price to earnings is completely irrelevant. Netflix is a company with what? I don't know the exact balance sheet. I forgot it already, but 58 billion in assets. I don't know how much liabilities they have, but 58 billion in assets, probably like 40 billion in liabilities, sitting at a 300 billion market cap on the stock. Yeah, that's overvalued. And the business isn't it declining? They're making less money than they've ever made, or they made less money than they did last year. Like, there's a lot of reasons why this is overvalued. If you think PE is relevant, I don't know. I don't think PE is relevant at all. I think PE is a very terrible metric. PE is for people who don't want to do analysis and come up with a conclusion on their own. Yeah, I was pretty close. 28 billion in liabilities. I was pretty close. They don't have a ton of debt, though. Yeah, they got quite a bit of debt. Yeah, I think that's overvalued, man. I think that's overvalued, but you can think whatever you want. You can think I'm wrong, but the market has agreed with me, not you. So, is what it is. If you if you think I'm wrong when the market has clearly agreed with me for the past year, then I don't know where you get your information from. because the market has agreed with my opinion that Netflix is overvalued for the past year or however long. When was the last time, when did I first start streaming about Netflix? Let's have a look here. Let's have a look here, because I think my opinion on Netflix has generally been the same every time. Let's see. My first my first Netflix stream was actually in 2021, so that's that one's kind of irrelevant. I probably didn't know what I was talking about in 2021, like a lot of you guys. But my last Netflix stream this year was January 20th, 2026. Where was the stock price then? January 20th, 2026. Where was that? Oh, it was already down. So, not very interesting then. I thought I had streamed it in 2025. Maybe potentially I deleted the stream in 2025, but maybe I wasn't doing earnings streams yet. I don't know. But either way, markets agreed with me so far, not you guys, not the bullish people. So you can think I'm wrong all you want, but the market has agreed with me, not you. And I'll take the market's opinion over yours, over a bunch of people who think PE is relevant. I'm going to take the market's opinion that agrees with mine. I never thought price to earnings was a good metric. I figured that price to demand and supply is a good momentum tool. They have pills for that. The rate of revenue increase is slowing. Buying Netflix at 50p is mad. Buying Netflix at 20 to 25p won't destroy you. Might be down for months, then pop. Might not. I just think P is a irrelevant metric, but I can kind of agree with what you're saying. I think PE is a very lazy metric. It's for people who don't want to analyze a balance sheet and come up with an opinion of their own. There's a lot of metrics. There's a lot of metrics like that in the stock market. But if you can actually do research and come up with your own opinion, I think you would have more success than going off of a PE ratio that is probably irrelevant. Tell us about the leaps you put on Netflix. Oh yeah, I forgot to do one of those. I forgot about those. Oh well. Oh well. Smart money looks at PE all the time. Is that what you think? Who told you that? Do you see? All right. I mean, you can think whatever you want, but I think that's an opinion. That's not really relevant. You don't know anyone who's smart money. You don't even know what smart money looks like. Check the charts? I don't need to check the chart. The charts agreed with my opinion this whole time, not yours. I'm the only person who said Netflix is overvalued. So, like, and I didn't need a PE ratio to come up with that opinion either. So you can go ahead and think whatever you want, but I actually know what I'm talking about. Like I said, the market agrees with my opinion, not yours. If you're bullish, if you've been bullish on Netflix the past year, the market never agreed with you. The market agreed with me. I've thought Netflix is overvalued for a really long time. So the market has agreed with me, not you. So the fact that you think you're like smart and bullish on Netflix at the same time. Like I said, if you're down to wait 5, 10, 20 years, maybe it'll pay off for you, but in the short term, you guys are completely wrong. Came for the conference call, getting ego instead. The conference call starts soon. I just gotta let you guys know who the boss is. A lot of you guys are in little discords that you pay for and following furus who know nothing about the market. I'm just letting you guys know who the real boss is. That's all. That's all. Just so you know. Your furu doesn't know what they're talking about. The Discord chat room that you're in, they don't know what they're talking about. So P certainly has its limitations, but the ratio is a useful baseline indicator for assessing a stock's valuation. I mean, yes and no.
Good afternoon and welcome to the Nflx Q2 2026 earnings interview. I'm Spencer Wong, VP of Finance and Capital Markets. Joining me today are co-CEOs Ted Sarandos and Greg Peters and CFO Spence Newman. As a reminder, we will be making forward-looking statements and actual results may vary. We'll now take questions submitted by the analyst community. We'll begin with a question on our guidance and our business outlook, and this question comes from Steve Cahall of Wells Fargo. What is the main driver of FX neutral revenue growth slowing from 12% year over year in 2Q to 11% year over year as the guidance for the third quarter suggests? Spence, do you want to take that?
Yeah, sure. Thanks, Steve. So, look, we don't manage the business on a quarter-to-quarter basis. Our goal is to sustain healthy revenue and profit growth. We talk about that in our letter every quarter. We're guiding, as you say, to 12% revenue growth in Q3 reported, 11% FX neutral. The Q3 revenue drivers are very similar to Q2. It's primarily growth in our subscription revenue from increases in memberships and pricing and higher ads revenue. We continue to see healthy acquisition and retention trends on the membership side, and our recent price adjustments are going well on the pricing side. Now, recall, there is a little bit of quarter-to-quarter choppiness in growth because last year was more back half weighted, so that may be a little bit of what you see in the deceleration. But honestly, it's not what we managed to. We managed to the full year, and halfway through the year, we're making strong progress against our goals, and we're tracking to our financial plan for 2026. We expect to deliver another strong year with, as you see in the guide, 13 to 14% top line growth for the full year. That's roughly 12% FX neutral, or about $6 billion of incremental revenue year over year. And by the way, when we finish 2026, it's worth saying also that in many ways, we're still just getting started as a company. We're entertaining an audience approaching 1 billion people with still lots of room to grow into our addressable market on every measure. We're under 45% penetrated into addressable households around the world. It's roughly 800 million addressable households. We're capturing, we think just 7% of addressable revenue market. It's about 670 billion of addressable revenue in the countries and categories in which we operate today. And we estimate that we're only about 5% of TV view share globally. So we're delivering on our 2026 plan, and we believe we got lots and lots of runway of solid growth ahead of us.
Thanks, Spence, for that thorough answer. I'll now move us along to a topic on the topic of engagement, where we do have several questions. This first one is from Rob Sanderson of Loop Capital Markets. His question is, management has stated that engagement quality is improving even as reported viewing hours per member have softened. Can you help investors understand what internal metrics provide confidence and how these translate into lower churn, pricing power, higher ads monetization, etc.? At what point would slow growth in total viewing hours become a concern?
I'll take this one and unpack it a bit, since I know that there's plenty of interest in this topic. Start by saying there is not a linear relationship between view hours and revenue and profit because all hours are not created equal. All hours don't provide the same kind of value to the business. And a really great example of this is live programming. So live events do a lot of lifting for us for acquisition. They're good for monetization. They drive ad revenue, fandom. They're also a promotional platform, but they do not yield typically as many raw view hours. So live, we expect will be 5% of our content budget this year, but we think that'll only be 1% of view hours. Having said that, 6 out of top 10 new member sign-up days over the past 5 years have come from live events. And if you compare that to another content category, take animation series, kids, family TV, it's also about 5% of our content spend, so the same amount of spend, but it's going to drive, we expect 8% of view hours. So same spend and 8x the raw view hours. So you can see the differences there, even though because as indicated by the amount that we're investing in both those categories being the same, we think they're doing the same value for the business. So we're constantly looking to improve across every dimension of engagement. We look at these as 3 dimensions: quality, variety, quantity, because they taken collectively drive acquisition, they drive retention, they drive the value that our consumers and our advertising partners ascribe to our service. We described in the last few earning calls the progress we've made on quality over the years. We're not going to go into the details of that quality metrics because, frankly, it's taken years for us to develop it and vet it and assess it and improve it. And we think that those details are a competitive advantage. We're also continue to expand the variety of our entertainment offering. You see us launch new types of content like live, like video podcasts, cloud TV games. Those are all doing different things in our portfolio to support different needs from our members. And then on quantity, view hours grew 2% in the first half of 2026. That's an incremental 1.5 billion hours relative to the same period last year. It's a slight acceleration compared to 1.5% growth in 2025. And just to be very clear, like all those other dimensions, we remain focused on continuing to grow that number. And better understanding how we are doing at delivering member value, member love is critical to our business. We get it. We geek out on improving that understanding, operationalizing that understanding. And with regard to engagement, when I started about 20 years ago, we had one number to describe engagement: hours. Just flat hours, no weighting, no adjustments. And very similar to how we've evolved other metrics in the business, since then, we've gone through about a dozen major iterations of our understanding that. We get more and more sophisticated because we know ultimately it's combined quality, variety, and quantity of engagement that translates into satisfaction and value for members. And that drives the strong business outcomes we see right now. Industry-leading retention. We see increased willingness to pay, strong advertiser demand, and those ultimately drive the top-level metrics of our business, revenue and operating profit, which are really the ultimate signs of our health.
I have this visual of you geeking out, Greg. It's hard to see. It's hard to see Spencer geeking out, but I can see us geeking out.
Those are 20 years of debates and wonkiness.
Well, let me geek out on the next question, which comes from Steve Cahall of Wells Fargo. His question is: amortization expense for content growth is accelerating in 2026. How is the slate performing, and what metrics are we watching to see how this growth in content drives increased member value? How do we think about the expense acceleration converting into revenue acceleration?
Let me take that, Steve. Look, I think when it comes to programming spend, there are 3 really important takeaways. First, to remember is that the vast majority of our programming spend goes into the core TV series and film, where we have a really strong track record, more than a decade, of translating those investments into value for our members and returns for the business. I'm going to come back to that core in just a second, but the second one is that we're really disciplined investors. So there isn't some hyper acceleration of content investment. We grow the content spend slower than revenue while we're continuing to invest in a huge addressable market. So we're forecasting content expense up about 10% this year. It's a little higher than the 8% we averaged over the last 5 years and below the 14% that we averaged over the past decade. The third thing we want you to remember here is that when we expand into new entertainment offerings, new initiatives, we do it gradually. We do it where we believe we can add more value for our members, and we do it where we believe we have the right to win. And then we look for the positive signals before we invest at material scale. This is our MO. It's been our MO for some time. You asked how the slate's performing. There's a lot to be happy with in Q2. I Will Find You was our biggest launch of an original series this year. Swapped is on track to become the second biggest original animated film, right behind K-pop Demon Hunters, which is exciting. Speaking of K-pop, we have K-dramas like Teach You a Lesson, which is on track to become the second most watched South Korea show ever globally. And it's on track to be our biggest series in South Korea of all time. There's a show called The Polygamist. You probably is not on your radar, maybe, Steve, but it's out of EMEA. It's another great example of our understanding of the local markets and the local regions. The Polygamist was a popular novel from Zimbabwe more than 10 years ago from an author named Sue Nyati. And the teams adapted that into a soapy series for South Africa, where it's now a huge hit and is traveling all over the region and all over the world. In Latin America, we've got a big season that just came back for Rosario Tierras. This was a show that started its life as a licensed show from TV Azteca in Mexico. After 3 successful seasons, we picked it up and produced an original season 4, season 5, and just greenlit season 6. So you're seeing the slate perform around the world, which is in a real differentiated part of our business. Now, with that said, with the core, we're also really pleased with the investment so far in our live programming. It plays a really important role, as Greg mentioned earlier, driving acquisition, accelerating ad revenue, fueling conversation, helping us to launch new shows. It's helped us build and it's also helping us to understand what are the benefits of live over the entire catalog. So, we're ramping up our live event slate. You saw the Kevin Hart roast in Q2, the Major League Baseball Home Run Derby earlier this week. What was really fun at the Derby, we produced an original and exclusive Hot Ones special that we shot on a baseball field to promote Will Ferrell's new series, The Hawk, which just launched today, actually. And I think it's a cool example of the intersection between our core, that core series, The Hawk, our expansion into new exclusive creator content with Hot Ones, with Sean Evans as a best-in-class creator. We're thrilled to be in business together. Plus live sports, all coming together on a baseball field and on Netflix around the world. The result there is a highly attractive, scalable return on content investment, and it ladders up to healthy business metrics that Greg just detailed, and our strong growth in revenue, dollar profit, and profit margin.
Thanks, Ted. Our next question on engagement comes from David Joyce of Seaport Research Partners. The question is, attention is being raised that your second season viewing of series is dropping and therefore affecting engagement growth. How would you address this? Are you going to revert to releasing one episode at a time, or making longer seasons with more episodes, or managing the production process so there is less time between seasons? Ted, you want to take that?
Yeah, thanks for asking, David. I really appreciate the question because in aggregate, we are not seeing any material change in our second season viewing compared to season ones. Our second seasons are performing well within our bands of expectation. Very often we see drop off from season 1 to season 2. It's very common in the industry, and it's even more so with us because we launch our shows so big. Our global reach, our discovery mechanism, releasing all at once. This enables us to find a very large audience early. So our shows tend to start really big, while most other places, their shows start pretty small and occasionally grow from there. For example, I just mentioned The Polygamist from South Africa. That show's already had 24 million views in 5 weeks, and it's still charting. When we look across the entire portfolio, across all the regions, all the content categories, our season 2 fall off is actually slightly improved this year relative to last year. Now, of course, you can pick any 5 data points to tell any story you want, but I'm going to repeat this. Our season 2 fall off is actually slightly improved this year relative to last year. So no changes in release strategies.
Thanks, Ted. The next question comes from Vikram Kesavabotla of Baird. Last quarter, you shared that the World Baseball Classic was a significant driver of signups in Japan. What have you observed with respect to the retention and engagement of these members since then? How has this influenced your perspective on the value of regional live programming?
Yeah, look, great. Thanks for asking. We talked about this a lot last quarter. It was World Baseball Classic on Netflix in Japan was a huge hit. It became our most watched program ever in Japan. It was the biggest baseball streaming event ever. World Baseball Classic is kind of like these other big live events, and they behave a lot like our returning seasons of our big shows. They drive disproportionate signups, and because of that acceleration, they can exhibit slightly higher churn. But the results are exactly consistent with that trend and in line with our expectations and all of our modeling. So we're thrilled, and we're continuing to see, to lean into live events because they have a big outsized positive on the business. They drive conversation, drive net acquisition. So we're going to continue to build out that global live event calendar and expand it to include some regional live events as well.
Great. I'll now move us on to a series of questions around content strategy. We have actually two that are pretty similar, so I will do my best to combine them. They're from Robert Fishman of MoffettNathanson and Rich Greenfield of Lightshed Partners. First, from Robert Fishman, what is your openness to leverage Netflix's leading global scale to bundle with other streaming services like Peacock, or even consider a streaming channel store to compete with Amazon, YouTube, or Roku? On a related point, Rich Greenfield asks, while it's only been a few weeks, the integration of TF1 in France, is that integration driving higher engagement for Netflix, including non-TF1 content? Do you think there is a meaningful opportunity for Netflix to become a distributor or platform for third-party streaming services around the world?
Yeah, I can take this one. Since the very beginning, when we launched our streaming service, we've always sought to expand the entertainment offering we've got in that service. We wanted to provide more value for our members. Our members consistently tell us that they want more from us. We see that in sort of usage behavior. We see it in any kind of testing or modeling we do around the space. And I would say that fulfilling on that customer desire for more has really been the driver for growth for our business for the last 2 decades. This partnership with TF1 is yet just another approach to expanding that offering. We're just adding to the range of capabilities that we have to do that and the mechanisms we have to do that. We built a leading streaming entertainment service by combining an unparalleled selection of high quality programming, best-in-class product experience. We've got a global footprint, big reach, and the ability then to deliver huge audiences, deep engagement, industry-leading monetization. So whether through licensing or through new partnerships like TF1, we believe that we can help other producers, other services maximize the value, the relevance of the content that they invest in by finding those bigger audiences. And we have many, many examples of this effect, including now in this new model with TF1. We also believe that such partnerships are good for our members. They enhance the variety of our offering. They're also effective for our business. And it's early in the TF1 partnership. We're literally 4 weeks in, so there's a bunch that we'll learn through this process, but we are pleased with the performance we are seeing in that integration. We've been able to enhance our already compelling service for our French members with even more local French programming we know that they want to watch. We've seamlessly integrated the TF1 product experience in a way where it supports their brand, but it also keeps things distinct. And we actually think this approach is advantageous for both them and for us. And the early results from how members are reacting, how they're interacting are very promising. So we don't have anything new to announce today. We're going to continue to learn. There's a lot that we'll dig into over time. We also think that there's a lot we can improve in the product experience already that we've seen. But if we see additional deals that similarly serve our members, that work for our partner, that work for us, we'll certainly consider them.
Thanks, Greg. Robert Fishman has another question in this category. What's the opportunity for Netflix to launch a fast platform given the rapid engagement growth in that space? Could Netflix library programming be used as an on-ramp for new subscribers, or would you be open to adding third-party licensed content to compete with other fast channels for incremental ad dollars?
Yeah, so if you go back, more than a decade when we transitioned from one tier, one offering to sort of a set of offerings, we've been consistently seeking to expand the range of those offerings. So think about that as price and plan choices and widen the spread of those, give customers more options, more range of choice, both at the lower end and also on the premium side. Maintaining and increasing accessibility, especially as we expand our content offering around the world, add new customer segments, that's a critical focus and goal for us. Also, optimizing long-term revenue is the other big goal. A free offering could make sense in some markets, but we have to be thoughtful about cannibalization of paid tiers. We've got to ensure that we've got the right offering, the right differentiation of that offering. It's probably also worth noting that having an effective scaled ads business in any candidate country for such an offering is clearly an important enabling factor to make those economics work. So that's all to say that free is something that we're going to continue to consider, but we have no near-term plans to launch something.
Great. Thanks, Greg. Next is from John Hoodlick of UBS. With the addition of video games and more recently vertical video clips and podcasts, what other content formats are interesting from a long-term roadmap perspective, and how should we gauge the success of these initiatives?
Well, let's not get into areas that we may be exploring here, and let's not pre-announce anything. But I am pleased with the early progress we're making with vertical clips for choosing on mobile and certainly video podcasting. We mentioned in the letter, we announced a partnership with the publishers like Condé Nast and Hearst and People. So we're going to bring on some lifestyle content on the service next month. And with the podcast, we're super encouraged with the viewing patterns that we're seeing. They have convinced us that this viewing is definitely incremental for us. We're seeing that in daytime viewing. So we're engaging our members outside of prime time, where we historically have done most of the engagement on Netflix. And keeping in mind, since professional long form content is a pretty small part of mobile, it's exciting to see that our video podcasts are out indexing on mobile for us. So it's a really great progress on both fronts. It's really important for us to meet our members where they are with the kind of entertainment that they're trying to enjoy. So we've been building out this great lineup of podcasters, include a mix of owned and licensed with creators like Martha Stewart. Kate and Oliver Hudson have a great new one. We're thrilled to have Jay Shetty's On Purpose exclusively on Netflix. And our members are starting their day with The Breakfast Club. They're loving the official Bridgerton podcast. Bill Simmons, Pete Davidson, Brian Williams, just to name a few. These are examples of us continuing to evolve and deliver members more entertainment value and in more ways to engage with stuff they love. But to take a step back and kind of contextualize this, over the last 15 years, the definition of TV has broadened and our definition has changed along with it. So it's easy to forget, but if you rewind the clock to say 2013, we had a single prestige English language scripted drama show. No unscripted, no local language, no originals, no comedies, no competition shows. And now we're the #1 creator of original programming around the world. Just this week, the Emmy nominations were announced, and we have an Emmy nomination on nearly every category. We didn't even know back in that first year if House of Cards would qualify for the Emmys. There was a bunch of debate as to whether or not it was TV. So these just announced nominations, I think, are a testament to the quality, the quantity, and the variety of our original programming. These expansions are evolutionary, not revolutionary. These are expansions on the same continuum that we started on years ago, adding new things as they become available to us, as we see signals that our consumers will get value, including in their Netflix subscription. That continuum has served our members and our business really well. So we're really excited about the progress on it.
Thanks, Ted. I'll shift us now to a new topic, which is monetization, and I'll begin with advertising. The question is from Steve Cahall, also of Wells Fargo. As you look at the ad tier average revenue per membership today, what are the biggest opportunities for increasing that monetization?
Yeah, maybe worth starting by noting that we manage the ads business for total revenue growth. So those are the optimization functions. ARM and fill rates sort of come along for the ride in achieving those goals. Having said that, there's still a gap between ad tier ARM and then ARM for our standard without ads tier. But that gap is narrowing. And I think of that gap as essentially near-term under-realized revenue growth. So it represents an opportunity for us. As we improve ads capabilities, we can close that gap over the time. And you've seen us do exactly that over the last year. How have we done it? We've expanded demand sources. We continue to execute quickly on our own ad tech stack. We're adding features. We're adding more ads products. We're adding more measurement. We're making it easier for us, for folks to transact with us. Those all drive demand. They drive competitiveness. That yields increased fill rates. It pushes ads ARM higher. Those improvements are really the bulk of the opportunity we have to improve unit performance and monetization for the next few years.
Thanks, Greg. From Sean Diffley of Morgan Stanley, there's a question on pricing. Has there been any change in the receptivity to price hikes this cycle? And how do you think about the timing and magnitude of taking price? In other words, first quarter versus fourth quarter seasonality, which is historically a stronger period.
Yeah, our first half price changes, these are markets like US, Mexico, Spain. They've gone well. The results are consistent with prior price changes. They're consistent with our expectations. So we aren't seeing any real changes in that performance. And then with regard to timing and magnitude, we really go back to that top level macro question we've got of, have we delivered sufficient value to our members? We're constantly looking at the signals that help us understand that question. Of course, plan selection, plan movement. We've got retention, which is industry leading. So we see improvements in value delivered start to move well in advance of making price adjustments. And then we price behind that value that we are delivering. Those same signals inform all of our price change. They include the ones that we've made in the first half of this year, and they help us determine that timing and magnitude that you're getting at. I think also I would be remiss if I didn't use this opportunity to state that I believe that we are delivering one of the best entertainment values that has ever existed. As a comparison point, if you go to the US and you take what Netflix subscribers are paying, they pay the least per hour of viewing compared to comparable SVOD offerings. In some cases, they would have to pay twice as much per hour for a competitive service. And our ads plan at $8.99 in the United States, we think is an amazing entry point. It's an incredible value, highly accessible. You think about all the entertainment you get for that. It's a pretty good deal.
Make sure you guys hit that like button.
The next question is from Rich Greenfield of Lightshed Partners. How should we think about reports of Netflix bringing back free trials in select markets? What provoked these tests, and are they a function of increased competition, market saturation, or both?
Yeah, Rich, you know well, we are always testing, we're always assessing, trying to improve the service. That definitely includes trying to understand the best ways to bring new members into Netflix. And our investment in several product capabilities over the last several years, for a variety of reasons, have now given us even greater flexibility and capabilities to test different approaches in different markets, different market segments, different conditions to see how we best bring those folks on. So, for example, we've tested a low-cost first month in Japan that was coincident with the World Baseball Classic. That served us incredibly well. We've been testing upgrade on us options in various different countries and various different conditions around the world. And, as a general part of this test and learn strategy, now we're testing free trials for non-rejoining new members in a number of countries. And obviously, we'll see how they perform and then we'll react appropriately.
Thanks, Greg. Our next question is from Vikram Kesavabotla of Baird. His question is, Netflix has made progress on its cloud-first video game strategy this year, including the addition of several new titles. How are these games performing on the platform so far, and how should we expect the video game offering to evolve going forward?
Yeah, I'll start by reminding folks of the market opportunity here. This is roughly $150 billion in consumer spend, ex-China, ex-Russia, doesn't include ads revenue. We've been building some solid foundations. Now we're seeing exciting positive signals that help inform and give us increased conviction in our future growth and the nature of that growth here. So you mentioned the cloud-based strategy, those cloud-based TV games. We really see it working. FIFA and Unhinged became our two most successful cloud game debuts. Really solid numbers that put it in the top tier of game performance for us. Another big positive sign is that since last October, so 8 months ago, when we really sort of scaled up this cloud initiative, monthly active players for cloud games have increased 11x, and adoption is significantly ahead of that curve that we had for mobile games, with even higher retention value. So we're definitely excited about that and focused on scaling up cloud games. We're also seeing positive signals with kids games. So Nflx Playground, which is our app for kids games, no ads, no in-app purchases, curated set of games, very safe space. We've seen 3x growth in daily players since that launched. That's driven more engagement in kids mobile games, which is up 600% year over year. So that's super exciting to see as well. Again, we're just getting started here. We're scratching the surface in terms of what we think the total potential of the space offers for us. You're going to see us continue to calibrate, refine our level of investment here, which is still very small relative to our overall content spend, based on demonstrated performance, based on what is working for our members and what's delivering returns to our business.
Thanks. I'll move us on now to a question from Jessica Reef Ehrlich of Bank of America. Given Netflix's global footprint of approximately 330 million subscription households, how do you think about leveraging that scale as a strategic asset? How does the currently consolidating media landscape impact these decisions?
I'll take that. So you're right, Jessica. We do benefit in a number of ways from the tremendous scale that we worked so hard to build over the last 20 years. We've invested in a number of areas of the business. Look at our tech investment, where we spend billions of dollars every year. And as a result, we have best-in-class discovery, personalization, plus a bunch of great R&D and innovation, including in production, in distribution, in data that we can draw on to constantly improve every aspect of the business, on the breadth and depth of our content catalog. These in combination all deliver this kind of flywheel of advantages. We have the biggest, most engaged audience in the world. Creators and advertisers love that. We lead the industry in monetization. We have better programming ROI because we amort across this global footprint, and that very often that programming is very travelable. This is good for our members. It's good for our business. It creates a really healthy model for organic growth. Greg mentioned TF1 earlier. I think it's being able to bring that scale to work with partners like TF1 in France to bring content to our members in multiple ways and multiple business models. I think that really helps when we could bring that distribution scale to local players. And finally, Jessica, I'd say regarding consolidation, the industry has been consolidating for over 10 years, so this isn't new. We focus all of our energy on pleasing our members and sustaining healthy growth for the business.
Thanks, Ted. Our next question comes from Sean Diffley of Morgan Stanley. What have been the early learnings from the Interpositive deal, and how should we think about potential cost savings in content creation? Could the impact of your $20 billion cash content budget, could this impact your $20 billion cash content budget on a go-forward basis, or is it more likely to be reinvested into more content and better compensating talent? Ted?
Great. Well, look, it's early days for Interpositive, but we're broadly seeing that Gen AI is starting to have an impact across hundreds of our productions. So important to note that we have other Gen AI tools in addition to Interpositive. We're thrilled with all the speed they're bringing to market for us. But we also have Eyeline and we have our animation lab. And what's cool is that they're all working together to drive innovation. We said in the letter, but Gen AI is scaling quickly across the entire creative process, from concept to previs through post and delivery. We're making higher quality output more quickly and efficiently than we could have using traditional methods. So Gen AI workflows now have been used in roughly 300 of our titles, with the largest concentration right to date is on post-production. But we're leveraging Gen AI, for really complicated shots and sequences. We called this out in the letter, but things like enhancing crowds or historical battle scenes, those kind of things. And we keep in mind that in many of the cases, productions would have left out those key shots because they just wouldn't have been able to afford them. They wouldn't have been able to do them in the timeframes that they're working on. So those sequences are saved by the availability and access to these Gen AI tools. On the content side, we believe it takes great artists to make something great, and AI is not changing that. AI will give creators better tools to bring their visions to life. Movies are being made by people who make movies. AI provides them with better tools to make them even better. So today, our talent, our talent leverages tools for things like set references and previs and VFX and sequence prep and shot planning. It just all makes the production itself so much more smooth and efficient and fast. And that's just the beginning. We're seeing it across the entire production life cycle. And AI, those use cases are scaling faster and faster. So our documentary series we just released called American Experiment. That series features 17 minutes of AI enhanced footage. It enabled us to expand the scope of the series in ways that just wouldn't have been feasible before. Those 17 minutes, Sean, they were produced twice as fast and at half the cost of previous options. So by equipping creatives with these tools, we believe they're going to enhance their abilities, and we are going to have better and more impact for every dollar we spend on our programming. So content creation timelines can be shortened and quality can be enhanced. So the cost savings will likely be reinvested into more content on the service, which fuels high quality engagement, and that whole kind of revenue profit flywheel that's going to come from that we've been talking about from day one.
Thanks, Ted. We have time for one last question, and we'll take that from Dan Kurnos of StoneX. And it's a question around capital allocation. Given recent reports around Lionsgate that Netflix has denied and broader speculation around interest in NBC Universal, how should investors think about the line between opportunistic IP and library acquisitions and larger scale M&A that could change Netflix's capital allocation or strategic profile?
Well, I'll take this if you don't mind, guys. Dan, we're not going to comment on market speculation, but I'd like to take the opportunity to remind everyone about our core philosophy. We have multiple ways to achieve our goals: producing, licensing, partnering, and we're constantly seeking ways, to allocate our resources in the most attractive options to maximize value for our members and delivering for a return for our investors. As we've said, we're primarily builders, not buyers, and that remains the case today. So others will speculate about our intent to, here because they have their own reasons for that. But our track record is clear that we have a very high bar to do any big M&A. Spence, you want to add anything?
Maybe I'll chime in a little bit specific to capital allocation, Ted. So thanks, Dan. So look, I just want to be really clear. There is no change to our capital allocation philosophy. We invest in the business both organically and opportunistically through M&A. And again, as Ted said, we are primarily builders, not buyers. We also maintain strong liquidity and a strong, healthy balance sheet. And lastly, we return excess cash to shareholders through share repurchase. And on that last point, you can see that very clearly in Q2. We repurchased 4.7 billion of shares this quarter. That's our largest quarter of share repurchase in our history. And we still have about 27 billion of capacity on our remaining authorizations. So we feel really good about our growth path. As Ted said, we've got a really high bar and we have no change in our capital allocation philosophy.
Great. Thank you, Spence. And thank you all for your questions and for joining us for our quarterly earnings call. And we will see you next quarter. Thank you.
Thank you. What did you guys think of that, chat? What did you guys think of that? I thought it was aight. As normal. It's just an earnings call. Usually isn't that special, but I thought it was aight. They ain't got nothing? What are you talking about? It's a company pulling in billions of dollars. Like, potentially tens of billions. Like, just because the stock price is overvalued and it's going down now, it doesn't mean Netflix's business is bad. Like, if you correlate stock price to how the business is performing, like, I don't know. I can't have a legitimate conversation with someone like that about the stock market. Under 5K portfolio, all in GME. Sure. If that's what you want to think. If that's what you want to think, bud. Just if that's what you want to think, sure, go ahead and think that, but just always remember, I'm a better investor than you, I'm a better trader than you, and I probably have more money than you as well. So you can assume and talk shit all you want, but reality is very different. Would I buy Netflix at this price? No. I think Netflix is overvalued still. Even after dropping 40-50%, I think it's still overvalued. 40%. I could be wrong though. But so far I haven't been wrong. Overvalued at 18 PE. If you think PE is a relevant metric, again, we can't have a relevant conversation. PE is meaningless. Yes, I am a GameStop investor. You're right. Because it's the greatest company in the market. Most undervalued company in the market. Sorry that I'm a better investor than you, and you don't understand the investment. Maybe if you understood investing, you would see what I see about GameStop, but you're just a little tinfoil huffer. A little FOMO buyer. Only buy stocks when they're going straight up. You don't understand real investments. And that's why you don't make money in the market. That's why you come in my chat and talk shit. Because you can't make money in the market. You just gotta type. You gotta be a little keyboard warrior to make yourself feel better. It's crazy, man. It's crazy how people can act like they're so hard and so smart, so good at investing, so good at trading. Yet the only reason you'd be paying attention to Netflix is if you actually bought it, most likely. So you're down 40% on your Netflix investment and you think you're smart, you think you're intelligent. I don't really understand that. All right, later, Break Nation. Have a good one, man. Appreciate you chilling out. Appreciate your support, bro. Does anyone have anything, like, good to talk about? Because a lot of the stuff I see in my chat, it has nothing to do with investing. Has nothing to do with trading. 500 worth of puts. Okay. How many trades have you lost before this one? You're flexing about YOLOing on an earnings report. Like, I don't know if that's a good flex. Anyone can gamble and win. It's not that difficult to gamble and win. You can also gamble and lose. So it's not really a good flex. I lost like tens of thousands of trades in the last 6 years. Well, there you go. Netflix is going to end up flat and kill his puts. You never know. Netflix pattern is bearish, so it's definitely the correct bet. But most people who trade options don't know what they're doing, so you're probably right. Maybe. I don't know. Who knows? Most people don't take profits when they're there. So, it is what it is. Typical shit. Everyone's got to try to squeeze every last little cent. And then they usually end up losing. Cybersecurity looking good. What, like Palo Alto or some shit? Palo Alto? Is that at all-time highs still? Oh yeah, all-time highs. I'm not interested in stocks that are at all-time highs, but still impressive. Your thoughts on RAM/storage? CoreWeave reportedly bought derivatives on RAM/storage as a hedge for possible falling prices. Looks to me like prices are near peak. I have no clue, man. I don't focus on that type of stuff. It's hard to bet against a market that's just going straight up, so like if you're betting you could say it's a bubble, whatever you want, but clearly the price action of RAM/storage is very bullish. So betting against that, in my opinion, is insane. But who knows? You know? We'll see what happens, I guess. What about PayPal situation? What's going on with PayPal? I don't know anything about that. I'm a GameStop investor. I pay attention to GameStop, and that's about it. I do these earnings streams to try to somewhat keep up on other businesses, but for the most part, I don't pay attention to most other things. Really, no point for me to do that when every dollar I make just goes into GameStop. But what's going on with PayPal? Stripe wants to buy them? Really? Oh, this is new? This was just announced today. Advent offer to buy Payout for more than $53 billion. Stripe and private equity firm Advent International have made a joint offer to acquire PayPal at $60 per share. Really? Isn't PayPal like way cheaper than that? I haven't looked at PayPal since earnings, I don't think. Ah, yeah. I was gonna say, I thought PayPal was at like $30 last time I looked. Pretty interesting. I don't think there's any like opportunity there or anything, but offer submitted earlier this month is backed by $50 billion in committed financing from banks. Offer represents a 28% premium to PayPal's closing price. Sources declined to be named as the deal discussions are confidential. PayPal, Stripe, and Advent declined to comment. Combining Stripe and PayPal, the most widely used payment platforms for internet merchants, would create one of the world's largest global online payment company, processing some 3.7 trillion of annual payment volume. Under the Yeah, I guess we'll see. I guess we'll see. It's only a couple trillion, nothing there. Yeah, there is nothing there. PayPal's already at $57. They're offering to buy it for $60. What do you expect to get from that? Stripe is probably at all-time highs. Is Stripe even public? Yeah, Stripe's not even public, so you can't do anything there. So what opportunity is there, Mr. Genius? There's no opportunity there. Unless you are already in PayPal at like $30, $40, there's no opportunity there. So I don't know, like, it's not a big of as an I got you as you think it is. You can expect Stripe to fail and PayPal dumping a lot. PayPal won't be a public company anymore, most likely, if it gets bought out. Won't be tradable on the market, I don't think. I've been holding PayPal losses. Yeah, probably anyone who's been investing in PayPal is holding losses because I doubt anyone has bought it since it's been relatively cheap. Most people only buy things when the stock price is going straight up. They don't want to buy things when the stock price isn't moving or declining. Unless they already FOMO'd in at the highs and they're just continuing to FOMO in as it drops. Most people don't time their purchases correctly. If Stripe fails to buy them, it will bankrupt? Probably not. Pretty sure PayPal's a profitable company, so it's not possible. I mean, we can look it up, but if PayPal is a profitable company, again, you don't know what you're talking about. You can't a company that's profitable can't go bankrupt. That's literally impossible. So you should try figuring out what you're talking about. They made $5.3 billion last year. Oh yeah, that's going to go bankrupt. Again, the stock price going down doesn't directly correlate with how the business is doing. The stock price is probably just overvalued, and that's the reason it's falling. And that was definitely the case with PayPal. So I don't know. But I'm going to get out of here. You guys have a good one. God bless you. Shout out all my OGs. I don't think there's any of my OGs here, but I appreciate you if you're here. And the rest of you guys, I'll see you in the next earnings stream, maybe. God bless you. Peace.